Maybe we got to factor that in.
Yeah.
No, in reality, event contracts is going to be, I mean, the really, really exciting part. And I hope they give us some July color here too, because the World Cup finale was way, way bigger than a lot of the main games, right? So hopefully they can give us a little bit of forward guidance that way. I know they don't actually do guidance, but they have said a few times in the past that, you know, we're on track to do our best quarter for equities, for options. Will we see any color on event contracts? I think that could get the market very excited. But for the most part, predicting their actual earnings is quite easy because we have only something like 4 or 5 days missing, you know, from the color.
I think there might be like two possible upside surprises. So one is related to predictions markets, Rothera in the World Cup. So they didn't really charge much in the way of fees from the Rothera platform itself, but it looks like most, if not all, the World Cup traffic might have actually been on the Rothera platform. I think I was initially wrong on that. And if so, that means that they basically get double the amount of revenue for each of those contracts that are sold because they didn't reduce the price in app. And so as a result, that could be a nice upside surprise. And the other place is with stock lending, the securities lending specifically. Usually in a very robust IPO season, you see very good numbers from that, like we saw last summer. It was a little disappointing last quarter, but I think that those two might be the numbers that we don't know. Of course, margin book also looks really good. That end up surprising to the upside. But yeah, overall, we know most of this stuff.
Can I quickly ask the chat, because Vlad tweeted out that the event contracts, you would get 50% off if you were a gold member and you were trading World Cup event contracts. Did any of you guys see that in app or no?
I didn't look for it.
Okay.
Yeah, I'm curious if somebody in the comments did.
I did not trade a single World Cup event contract, to be honest, but you know, the platform had billions, literally billions of contracts traded. So that should definitely be good for what's been going on with Hood, even though we'll see some of those results in Q3. My only fear for this earnings is that, like, Tanner, did you get a final revenue number in your projections?
1.315, 1.3 billion.
So that was, I'm at like 1.307, and the street's expecting 1.28. So I'm like, I don't know, dude. Even though that's a beat on a day like today, I mean, SoFi had massive beats and market didn't care. ASML massive beats. TSM is Robinhood special enough to get the pump. And honestly, I don't even need a pump. Like, let's just not go back to the low 80s and 70s. If we could just stay around this 88 to 90 range, I'd be happy on a day like this. But I don't know. I don't know how the market's going to interpret these numbers. But we know the numbers are going to be amazing because Q2 obviously was a record quarter for them.
Yeah, yeah. I mean,
I think.
Go ahead, Roy.
Oh, you go ahead.
No, I was just going to say we've definitely seen some pretty large surprises, especially on EPS. They've definitely have shown way higher margins than I would ever have expected in previous quarters. So if there is going to be a massive surprise, it's going to be their take rate. But obviously, we know how much volume that they've actually done. Like, it's hard to be wrong on a lot of that. It's just what's the take rate on crypto? What's the take rate on, you know, their options contracts, and then event contracts? I think we kind of know pretty flat rate. But because of the recent changes, you know, is this much better for them because it's their own platform, or are they just passing on the savings to the consumer?
Yeah. And I think the other big thing right here is, as Roy said, their crypto chain, as valuable and as cool as that is, I don't know if we're going to see an economic impact of that in the coming months, maybe not even in the coming year, right? Like, they're building this massive crypto ecosystem, super bullish, but it's not what they make money off of. They make money off of the transaction volume. So that's something that's super bullish, just like the Trump accounts are super bullish, but it's not necessarily revenue generating or earnings generating in the short term. And, you know, this market is short-term focus right now.
I think it is, though. I mean, so we can see, you don't have to go on Artemis for this, but if you can throw this up, I'll show you these metrics real quick. So, of course, daylight, a lot of this is, you know, we're just looking at 1 month. If we look at 1 month instead of 1 year, but like you said, fees, this is what they've been making. It's real money. You know, they peaked out at 350,000, which, I mean, like, that's not a ton, but for one day, it's quite a bit. We also need to remember, although this is actually pretty low, uh, surprisingly so. Usually over weekends, these don't do quite as well, just the way that crypto does. But it's a decent bump in terms of revenue. Now, I don't know going forward because this just started. So for the next quarter, if this is going to be broken out in addition to the crypto numbers, or if they're just like, hey, cryptocurrency transaction numbers. And what's going to be really interesting to see is my guess is because of the way that this is vertically integrated versus what they've done before in the past with crypto, this might actually end up being a higher take rate overall.
That's fair. It probably will be a higher take rate. No, you're right. But the thing is, that's Q3 though, right? We didn't get any of that.
Yeah, this is Q3.
Okay. Yeah, it's a fair point. Look, if Robinhood Chain ends up flipping a lot of the decentralized exchanges volumes, I mean, it's definitely bullish. Question is, what's the take rate on that? Because if it's not a good take rate, it's not going to come down to the bottom line. But there are things to be excited about. The Trump accounts, we had to spend $100 million on that, so that was more OpEx. But the Trump accounts are super bullish for long-term AUM accumulation. So, that future of finance story on Hood, speed, innovation, that's not slowing down. It's just they have really tough comps from last year. Which is
Yeah. Do you think that they're expanding internationally? Do you think that they're actually going to start seeing meaningful market share take? Like, I think the UK, Singapore, some of these launches have been okay, but I've been very surprised to the upside on how good of a launch the Robinhood chain was.
Dude, people like trading meme coins.
It's incredible. It's incredible.
And people can trade it internationally, right? Because it's crypto. So
yeah. But when do you think the next, 5 million members ends up coming onto Robinhood's platform? Or do you think that's just gradual? Or is that catalyst driven?
I think it's gradual. Yeah, I mean, the biggest catalyst for them, they added like 10 million members in 3 months when you had the GameStop squeeze.
Mm-hmm.
If we get a catalyst like that, maybe, but they're not expected to get 10 million members tomorrow. They're expected to get, a couple 100,000 every quarter as they've been doing.
Yeah. So the 2 quarters that we know, or 2 months that we know about, I believe it's 0.3, so 300,000 net that they've increased by. And so we'll have to see what the last month looks like. But it doesn't hurt to have major IPO events like SpaceX, certainly. And also, like the big factor is going away from the pattern day trading rule. It's Stephen Quirk's fireside chat seemed to indicate like, hey, they've lost a lot of users in the past, that this might be a way to reclaim them and also mitigate some of the loss going forward. But yeah, international, I think it is going to be, like Amit said, that it's just going to be that they'll slowly take market share. But the one pushback in the back of my mind is they did this big senior convertible note raise, not because they needed to. It's not because they're running out of money or anything like that. They have plenty on the balance sheet. It's optionality, but we don't know exactly what that's for. And so is it like, hey, we see this great opportunity out there. We just really need to ramp up our marketing. Is there an acquisition in play? What is that exactly for? And I'd love to hear that in the earnings call.
By the way, SPY just lost 730. Tanner, you can show the sell-off that we are experiencing here.
Yeah, we're at new daily lows right now. Look at the NASDAQ down 1.6%.
The worst part about this is it's been every day for the past week and a half. I think there's maybe been one green finish, and that was like barely. It's just been 3%, 4%, 5%. In the case of Micron, it's been like 7% every other day. And at this point, it's just feeling like the market legit is afraid of this AI bubble popping, or there's a forced deleveraging event. Even though SaaS is up, as Chris says, which it should be up, because if SaaS names can't go up, as the semis are down, Palantir being the exception here. So that's
What's going on here, man?
I don't know, dude. There was some sell side report that said they're going to miss their U.S. commercial numbers yesterday, and that kind of tanked it. But the other SaaS names are getting some momentum.
Yeah.
The ones who didn't buy.
Yeah.
I was just trusting you guys. You guys are the Palantir boys. I follow in, and now all of a sudden the tides start to change. I don't know what this is.
You guys are a bit more bigger in terms of analyzing the neoclouds than me. I'm assuming nothing in your thesis has changed for both of you. Roy, I know you're big in CoreWeave. Tanner, big in Nebius. Like, do you think, again, this is just momentum drawdown, or it's just like they're going to get hit if the semis get hit, and it's kind of inevitable. You have to deal with it if you're like if Nvidia's down 3%, obviously Nebius and CoreWeave are going to be down more.
Yeah, it seems like more than that. I especially with CoreWeave, like the way that they're looking at this debt is, I don't think I think the hardest thing right here for CoreWeave is that the analysts that cover the data center plays in CoreWeave are not usually associated with energy and energy trade stocks. And the challenge there is with CoreWeave, they have these take or pay contracts, which are known and basically guaranteed revenue. It's very hard to get out of those that are longer term. And so like when Meta announces like this whole data center thing, we'll see, what that ultimately looks like. But they're like, the thing that's not going to happen is them exiting their contracts earlier than the December 2031 or December 2032. They have two different ones. But anyway, like if analysts that were covering the name and investors as well understood like these are take or pay contracts, there's no threat of losing them. And even if they did somehow, like they right now could just come out and also announce longer term contracts for higher money than what they currently have. But with the take or pay contracts, the reason why you get the loans that you do is this is just how it works as far as these energy infrastructure plays. Massive contracts that cost a lot of money, guaranteed revenue, and then you take lending against that. So it's very easy to actually project and see what that revenue curve looks like. If there is a threat to this debt, an existential threat, the only possible threat is massive delays in their data center projects. And that's one of the areas where CoreWeave actually really excels. They've had one single data center, I believe, out of all the data centers that they have, and they're huge, that had a delay, and then that was quickly rectified. Now there are some credible bear theses, but for the most part, like it's just, there's debt, and it's the debt is higher than present revenue, and we're just going to ignore the future. Okay, and we're also going to pretend like that the future with the take or pay contracts is not happening. It's like that's really strange too. It's just odd.
Sorry, my mic was muted. What do you think about this story, Roy?
Tanner, the market is closed.
Do you have a bell?
I do not have a bell.
I got a water bottle.
Okay, there you go.
How'd I do?
So Tanner's controlling the stream, so he will have the stock prices up. But just to give everyone a glimpse of the earnings, we have Microsoft, Meta, Hood. Obviously, those are the top three. Whoever gets the numbers out of me, Tanner, and Roy, whenever we get them, we'll just stream them out. You have Starbucks, you have Chipotle, Lam Research, Fortinet, Carvana, EA Sports, Teladoc, Equinox. So we have a lot of stuff, but Meta, Microsoft, Hood, we're going to try to get those as soon as possible and see what the market says.
I forgot I was controlling, so give me a second.
Yeah, Qualcomm as well.
Yeah.
Yeah, paying higher rates on your debt obviously is not a bullish thing, but it doesn't destroy the thesis at all.
Okay, I have Qualcomm. Adjusted EPS, 221. That was in line. Revenue, 9.9 versus 9.6. That's a beat. Fourth quarter adjusted EPS, 205. The street wanted 235. That's a miss on the guide. Qualcomm says we are seeing unprecedented increases in memory pricing. Supply constraints made cyclical headwinds for global smartphone industry in fiscal year 2026, which means it looks like they're saying the smartphone market, which is their biggest market, is not necessarily recovering. Which they kind of hinted at the investor event.
Wow, just lost that. Up 3% to down 2%. Microsoft's up 2.4. You got the numbers on that?
Microsoft is, I don't, but I have Meta. Meta missed EPS by 14%. Street wanted 720. They came in at 618. Revenue, they beat by 1%. Street wanted 60.29. They came in at 60.8 billion. Oh boy, you can't miss on EPS.
That's surprising.
You can't miss on EPS.
Microsoft pushing higher, up 2.4%. I got their numbers here. It says revenue is up, beat by 3%, up 18% year over year. And EPS, the street wanted $4.24. They got $4.81. Beat by 13%. EPS is up 32% year over year. Do we have CapEx numbers for these companies just yet?
We do not have CapEx yet. We should be getting that very soon. We don't know if they're actually going to... Oh, no, Meta gave it. Meta says... Whoa! Okay. This is Well, this is not that big of a deal. So Meta is keeping it at 145. They increased the lower end from 125 to 130. They are not giving 2027, which is what I thought I saw, but they're not. So 145, Meta's keeping it for 2026. We might get it on the call, folks. We're probably not going to get it on the print. Microsoft is also, I'm not seeing CapEx.
Meta's down 7.5% now.
Oh my goodness.
Them not
540.
raising their capex on the top side is strange if they're actually going to be serious about the data center build out for themselves.
That's correct. They did not increase their CapEx for 26 on the top end. You're right, Roy. So I think the market's more upset about the EPS miss.
Yeah.
Tanner, can you pull up ARM? ARM, we have 45 cents versus 40. That's a beat. Revenue 1.29 versus 1.26. That's a beat. Q2 revenue 1.38 versus 1.34 guide. That's a beat. EPS guide 47 cents versus 43 cents. ARM has a triple beat. You're getting a little bit, but
Wild.
yeah, obviously still taking a hit. Wow, 7% on Meta.
Yeah, Meta's down now 8.7%, and Qualcomm's down almost 6% right now. By the way, both of these companies were down, like Qualcomm was down 4.4% during the day to only follow it by another down 5.2%.
Tanner, you can share my screen right here.
Yeah.
A little more coverage on Meta right now.
You're working overtime, eh? No setup, still can't perform as fast.
Now, Meta revenues did beat estimates at 60.8 billion versus estimates of 60.17 billion. Now, we are always focused on capex for Meta. Meta raising the bottom end of its capex range for this year, fiscal year capex between 130 and 145 billion. This is a slightly narrower range than what they had previously forecast of 125 to 145 billion. So not moving the top end of that range, just bringing the bottom end of that range up higher. The company also guiding to third quarter revenues of 61 to 64 billion. The estimate is 63.15 billion. So we're going to continue to dig through these numbers. We see shares now down 8%. But
yeah, it feels like the EPS beat the street is upset about. Is Hood out? I don't see it yet. Nvidia just lost 190.
Hood's numbers must be out. They're
tanking? They're
no,
up
3%.
Oh my goodness. Can Hood actually... Can we do it? Can we do it, Hoodie? In one of the worst macros we've seen all year.
Oh my gosh.
Hood's at 92. Even if we stay in the 90s, dude, I'd be happy. Robinhood 1.31 billion versus 1.28. That's a beat on revenue.
Dude, I hit the freaking thing on the head.
You got it right on the bell.
I said 1.315. I was off by $50 million or something.
Tanner, you got to share screen. Crypto revenue 100 million versus 86. They beat. EPS, whoa. We beat by 44%, folks. Street wanted 43 cents. We came in at 62. How the hell did they get 62 cents a share?
Maybe the Rothera, the World Cup stuff.
Yeah, they can squeeze out margin like crazy.
The analyst got it wrong then. The analyst did not see the pricing power on World Cups. EPS is up 50% year over year. Revenue's up 32. It's not, 100% like last year, but 32% is pretty damn respectable.
Fortinet's up almost 10% right now, and Lam Research is up 9%. I don't see their numbers, however, but these companies are also moving very big right now. Carvana down 10%. Nothing new there. That happens every time, it seems.
Real quick on Meta, the guide is 64 for next quarter. The street one is 63. That's a beat. CapEx, we talked about 148 billion. Advertising revenue was up 27%. Their operating margins went from 43 to 31 because they had 3 billion in legal fees and 1.2 billion in severance costs with the layoffs, and then they're blaming AI infrastructure investments. So their operating margins took a big hit, which also the street might be upset about.
We lost the Robinhood pump. It's now flat. Microsoft's still up 3.5%.
Microsoft, I'm waiting for more numbers, but they beat operating income by $1 billion, 40 versus 39. Revenue, they beat by almost 3 billion, which is a pretty big beat for a company like Microsoft. And then EPS, 13% beat. That's also not bad at all.
I don't know why Carvana's down. They did a pretty decent double beat here. So maybe there's something else in the report. Sure,
So
we'll see. Here.
Carvana, yeah, you already mentioned it. Double B, right?
Yep.
Yeah. Yeah, that is. We got to see what's going on with that. Ford in that 20% beat, 90 cents versus 75 cents EPS, 2 billion versus 1.89 billion on revenue. Revenue's up 26%, EPS is up 41%. Ford net cybersecurity theme. Market's really loving that. Starbucks, they beat EPS by 31%, 85 cents versus 65 cents expected. Revenue 9.3 versus 9.1 billion.
Carvana down 20.
Dude, what the hell did they say?
Oh my gosh.
What did they say?
Is there maybe guidance? Do they guide?
Yeah, I don't think many of us follow this company, so
Maybe people aren't buying cars as much.
down 21%.
Well, if AI wins, who needs a car, right? Wait,
That's like what Elon was talking about in his last interview. He was like, hey, by 2036, we're not going to need money.
Yeah, so if you're down a lot of money today, just remember, we don't really need it.
You don't even need it.
Tanner, you can share my screen.
Yeah, sure.
Compare this one. It's $4.74 adjusted for the quarter on EPS. That does exclude an impact from OpenAI. There's also a $3.2 billion gain related to Anthropic. So the EPS number a bit messier. We're not going to comp, but $4.74 there. Azure growth better than expected. That was 43% growth on Azure revenue, better than the 40% Street was expecting. Want to read you a quote from CEO Satya Nadella. He says Azure revenue surpassed $100 billion for the first time. Also mentions Microsoft 365 Copilot seats surpassing 30 million paid seats. That's a key number. He says it reflects some confidence in customers placing us to power their AI transformation. And that is
that's actually really, that's software revenue. Like Microsoft really needed to prove that enterprises weren't canceling seats. And it looks like they did that, even if it's slightly, but that might be why the stock's actually up 3% right now.
Latest, guys. I will keep digging through this for some more.
Okay. You got the Robinhood thing? I was just about to.
Oh, you got the.
Yeah, I got everything. So let's.
Okay.
Yeah. Good.
Okay, so let's get in the numbers. Revenue is up 32%, 1.3 billion. Net deposits record 22 billion. Gold subs almost 5 million, 4.8 million. Robinhood now has 13 business lines that have reached 100 million or more in revenues. Vlad, whether it's Robinhood Chain, Robinhood Ventures, or Trump accounts, our product velocity is focused on one goal: making everyone an owner. Broad ownership is essential to a free and stable and prosperous society. CFO Shiv says the business is firing on all cylinders. We delivered record revenues and drove new highs across equity, options, event contract volumes as we continue to win market share. Our product velocity continues to deliver new products for customers and drive a more diversified business, with Robinhood Legend and the credit card business joining our growing roster of now 13 different business lines that have reached 100 million plus in annualized revenues.
Can I switch it over to the presentation?
Yeah, go ahead.
We added 940,000 new members with a 17% attach rate on Robinhood Gold.
I think that's the highest we've done sequentially.
Yes, but it's through acquisition as well.
That's fair.
Yeah. I'm sure there will be a lot of prediction market ads as well, and hopefully they break that out. Dude, actually, you know what? They did break it out last quarter. They said it was 300,000 was supposed to be from acquisition. I think it was WonderFi. So we're looking at around 640,000 new ads, funded customers that were probably coming in organically.
Very nice.
Correct.
Yeah. SpaceX effect, I guess, in part.
Yeah.
And international adoption. That's good. Yeah.
Event contracts.
I would love to know how many are international. I might note that if we get a chance to ask a question.
They bought back 4.4 million shares at 94. So they spent about $414 million on buying back stock. ARPU is now $187 per user. That's up 24% year over year. OpEx, they decreased their guidance on OpEx.
Wow.
That's also probably why the street's not really hurting the stock after hours. They're actually going to spend less money versus more.
Oh, you know what? No, this is not including Trump accounts, is it? No, it can't. That was millions.
Yeah, no, it's not.
Yeah. That was a big part of the OpEx, wasn't it? Was building out Trump accounts?
Yeah, 100 million towards that.
Yeah.
Okay.
Yeah, I'm not sure why that decreased, but we'll probably find out. Margin 21.6 billion, that's a record. Retirement accounts 34 billion, that's a record. Equity volumes 956 billion, almost $1 trillion. That's up 85% year over year. Options 740 million. Crypto 40 billion. Event contracts are up 1,000% year over year, 13.6 billion. As Microsoft starts to go red now. Robinhood's actually moving 3%. Robinhood in this macro where Microsoft and Meta are getting hit, going up, is speaks to the tenacity of these results being resilient.
The sheer tenacity.
In the middle of crypto winter. Doesn't matter.
Of crypto winter, dude. I mean, 22 billion in net deposit, dude. To get $22 billion in 90 days to leave bank accounts and JP Morgan and Bank of America to go to Robinhood is unbelievable.
The Robinhood retirement asset under custody on page 8. That's a huge leap.
Which one? Sorry, is it this?
Yes, yeah, that second figure. Boy.
Yeah. Oh yeah. Yeah, it looked like it was slowing down. I wonder what the big pop was there.
It's certainly not portfolio performance. Maybe there's a lot of people holding Micron or something at quarter 2.
No, I think it might have been portfolio performance. End of June. We have a way of doing. They show this off. Wait, let's see. Changes in total platform assets, net market gains, 39 million. It was a big quarter for gains.
5% on Hoodie after hours.
Sorry, I said million. $39 billion were made in Robinhood accounts. Yeah, stock is up 4.5%.
By the way, Microsoft did about 20 billion in positive free cash flow this quarter, so they are not free cash flow negative yet.
Wild. And Azure picked up, right?
Azure picked up 43%. It was like 39 point something last time. 100 billion. Nadella says we are advancing the frontier on the cost to outcome curve, ensuring every customer can turn tokens into business results. This year, Azure revenue surpassed 100 billion for the first time. Copilot reached over 30 million paid seats, reflecting the confidence customers are placing in us to power their AI transformation.
What about buybacks? Are they still doing buybacks?
They bought 10 billion. Yeah, 10 billion worth of stock and dividends.
Wow.
Dude, if Microsoft keeps up the buybacks, doesn't go crazy with the CapEx, and keeps the software business growing, it's already down 25%. Like, does it really need to go back to the 350s?
Yeah, well, mostly every chip that they have is going towards customer allocation, right? You don't have what Google or Meta is trying to do, where you're also trying to train your own frontier models. And so, Google kind of has to buy 2 chips for every customer that wants one, because they want them themselves for large training clusters. So I don't know. Maybe the unit economics right now for Microsoft just fits.
Agreed. Tanner, let's show Qualcomm and then we'll get back into Microsoft here.
Revenue beat at $9.95 billion, with both the chip and licensing units topping estimates. Auto posted a record quarter, but they are calling a bottom, specifically in China smartphones for Q3. The guide, though, a little light, midpoint earnings of $2.15 below the street. The CEO and CFO that I spoke to just earlier said the smartphone mix is shifting. Qualcomm leans more premium, and that's really helped them in previous quarters, but they're starting to see buyers trade down within premium, driven by higher memory costs. And because of that, they're hiking prices double digits to offset it on September 1st, though they say gross margins still dip just below.
That's not good for inflation. I mean, it's the weird nuance of these memory prices going crazy, which are forcing chip makers in the consumer electronics place to put the cost on consumers.
Their usual range next quarter. We'll probably get those numbers on the call. They also now see Apple revenue falling faster next quarter. That's Q4, more than the 20% they had guided before. So that is a concern. I asked the CFO about it, and he said he's happy. It frees up supply to use elsewhere. Lastly, the company is diversifying away from smartphones and reiterated that non-handset chip sales should jump from 24% to more than 60% next fiscal year.
becoming the majority of Qualcomm's chip business for the first time. So you can see shares, though, reacting negatively, down 5%. Now for ARM, that's a different company. Beat across the board. The chip designer earned 45 cents adjusted. Revenue came in at 1.29 billion, a record for a first quarter driven by both licensing and royalties. The guidance slightly higher, sees current quarter revenues of 1.38 billion on EPS of 47 cents, which was just 4 cents higher than estimates. Big driver is ARM's new AGI CPU, so an actual chip, a real chip. CEO saying demand has exceeded expectations and that confidence in beating its $1 billion CPU target has climbed just over the last 90 days as the company works to lock down more manufacturing capacity, which means it's preparing for more demand. I know Sibo is ringing the bell, so I'll let you guys go, but you can see shares down slightly, guys.
Let me do a quick update on prices right here. Fortinet, like they said, up 8.9%. Lam Research up 6.2%. Fair Isaac Corporation actually down 6.8% as well. Wow. Did we get FICO's numbers?
No, I didn't see them. I'll try to find them.
Starbucks up 8%. Chipotle up 6%. Carvana now down only 14.9%. Qualcomm down 2.7%. Microsoft, one of the more green days today, yet only up 1.8%. Meta down 5%. Robinhood flat.
FICO beat EPS by 3%, 12.18 versus 11.78. They missed on revenue by 0.38%. Revenue's up 26% year over year. It seems like obviously the market's reacting more to Microsoft and Meta. So we talked to SPYs down after hours again, 0.23%. We talked a bit about Microsoft. Headline numbers look fine. Guys, we get CapEx for Microsoft at the end of the call. That happened last time as well. So we don't have any updates on CapEx. I mean, I feel like Meta is still a little bit of a mystery. Why did they miss on EPS? Was that a tax thing? Because that's confusing for them to miss by 15%.
Let's see if they have the report out. If you're okay with going through it, we got a little bit of time before this call. What time do you leave, Amit?
In like 15 minutes.
Okay.
Operating cash flow was 31.9 billion. Wow. Free cash flow for Meta was $800 million this quarter, which obviously is a lot lower than what it usually. It's signaling it's going to be negative pretty soon.
It's actually shocking whenever you put it into perspective how well Microsoft did from a free cash flow perspective while doing massive amounts of buybacks.
I don't get how Microsoft did 20 billion in free cash flow. I don't get it because Meta would have done 32 billion in free cash flow if they didn't spend 31.1 billion on capex. So how did Microsoft get?
Well, what's Microsoft's capex this quarter?
I'm still trying to find that. By the way, RPO for Microsoft 678 billion. A lot of that still is OpenAI, but it is up 84% year over year. CapEx was 41 billion.
I have a different number than you.
You have 35?
Yeah.
CapEx including leases is 41.
Okay.
I don't know if the leases tend to be included or not, but
yeah, I've got 35.8. But still, that's the highest that they've ever shown. Huge jump up here.
How the hell did they get 20 billion of free cash flow left? Or is that number wrong? But I don't think that number's wrong.
No, I have that same number. What's their?
Oh, well, no. They made 3.2 billion on Anthropic, but I think that's still unrealized.
Yeah, that's not cash flow.
That's not cash flow, right? Meta's operating margin is down to 31 from 43.
They did $55 billion in cash from operating activities.
Oh, so they spent 30 on capex. Okay, so you're left with around 20.
Wait. They did $55 billion on how much revenue? On 90 billion, they did 55 billion in cash from operating activities. And this stock is flat, up 2%.
That's crazy. Good report by Microsoft.
The margin there is insane.
The problem is Microsoft's levered to OpenAI.
You kind of sounded like Trump there, so I'm going to need you to say it again. The problem is, just say how you were going to say it originally. Go.
Microsoft has a big OpenAI stake, dude, and the market is really getting sour on the private AI labs right now. So maybe, I don't know how else you explain Oracle getting hit this badly. Maybe it's just that. But those numbers are unbelievable, dude. Unfreaking believable.
It is wild.
Well, I do hear that they're going to vibe code Teams and Microsoft Word now, so that nobody needs software.
Vibe code some Windows.
Yeah.
Guys, what are we thinking in the chat? Does it make sense? This is weird. This is similar to Google. I mean, the restaurants are having the best earnings. Chipotle double beat, Starbucks double beat. Micron's down 11.
Not in after hours. No way.
It's down another 2 after hours. Dude, is this going to lose 700?
725. The Qs are down another 0.25% point here.
So if Micron goes down to 300, what do you guys do? Just all Micron?
I might have to. I was even looking at CoreWeave and I'm like, what do I start selling? Like,
yeah. I've sold some things that I didn't want to sell just to buy more CoreWeave at higher levels than we are right now, and it's like,
yeah, I might even have to dip into a little bit of Nvidia because the price has actually stayed pretty stable versus a lot of other names that have trimmed down 60%. It's just I'll be increasing my risk, and it's not that there can't be worse to come. There absolutely can be.
if Robinhood gets a bid off of this, like, and it continues, like, it's a great report, and it continues, like, if we see it go back into the hundreds, and the rest of the market keeps going the opposite way, it's my number one holding. I have not sold any Robinhood shares, I think, ever. I've sold Leaps. I might trim some, even though it's like a great business. I don't want to do it, but man, number one position looming large there. So,
I mean, Hood being flat on this to slightly down is with you got. I mean, if the semi names are falling another 2-3% after hours, and Hood, never mind, Hood goes down 3%.
Oh.
Yeah, the problem with Hood is the semi trade is what's led to all the trading volumes, and so if that dies out, the trading volumes too. I mean, like, Robinhood doesn't have record quarter without people buying Micron calls.
Dude, honestly, you can paint such a bearish story, like the stock market's crap, crypto's crap, there's no World Cup anymore. Sell it all.
But money's not going to matter in 10 years, dude. Like, we have to remember that. Elon told us we don't really need the money.
well, this is nice. The majority of the remaining gold deposit boosts earned by customers prior to the end of the program, this was last year, we paid out over the next 5 months. So that'll no longer be a overhang either.
Yeah, this is it's not even Robinhood's fault right here, guys. But if semis are going to dip like this, now granted, I think this is some after hours shenanigans happening right now. I don't really think there's I mean, it's the forced selling from the forced selling after FOMC. So we actually saw this last night with Micron, and then it fully recovered, into the pre-market. Obviously had a bad day, but a lot of this seems to be compounding on itself. Where's Nebius after hours? We are at 140. See, that's actually a little green, which usually follows Micron, so that's going the opposite.
Yeah.
Meta's still down 7, dude.
But Meta should be red right now.
Yeah.
It should.
Why?
Well, growth slowed. 28% growth is not what people want to see. They want to see 30% for the full year. I'm not saying that the company is not oversold, but if you're going to give them this multiple and then you get worse than expected earnings, and they did raise capex. Well, they didn't raise the top line. The midpoint of guidance went up. I could be okay if I saw a little bit of red in Meta. That stuff makes sense to me. The part that doesn't make sense is whenever Robinhood's down 4% and Microsoft, I mean, it's not red right now, but like, if this turns red, which could absolutely happen, it should be way up more than up 2% here. Micron being down another 2.3%. We're going to get close to 3 times forward PEs again here.
Two things that are kind of smaller in the Robinhood report that are interesting. They said the Trump accounts, that they are on path to get the number of Trump accounts signups to tens of millions. That's plural tens of millions. And also that they're now serving over 1 million customers outside the US.
But just what does it mean for them? What percentage of their revenue is showing up from Trump accounts? How do I even gauge it as an investor?
Yeah, it's so they're probably well, it's a margin plus contract, so they're making a very small margin on that. I think that the interesting way that they can leverage that is, the question that I asked Vlad last time on if they're getting interest from other states, other governments as well, and it was pretty clear that they were. And so those could be like, this is one of those line items where like brokerages as a service, I guess we could call it that. They might be the one that ends up building a lot of this out. So once you do it once, I would imagine the next iterations are probably not as complicated.
You can share my screen. We'll get a little update on Meta right here.
Costs and expenses, which was a 55% year-over-year increase, includes $2.4 billion of charges related to legal proceedings and $1.18 billion of severance expenses in connection to the May 2026 headcount reduction. So just flagging those two factors there. As we look ahead to the call, which starts in about 10 minutes, we are expecting Mark Zuckerberg to share more on the enterprise business. He did say in the quote in the release here that AI is accelerating the core business, powering our next generation of products, and opening the door to entirely new enterprise opportunities. So looking to hear more from that about him shortly. Back over to you, Melissa.
Hold on. Do we want to listen to that if it starts at 4:30 for 30 minutes or something? What do you think?
It's up to you guys. I'm going to leave in like 5 minutes. Yeah, I mean, you can.
I would be interested to listen to Mark rather than myself, to be honest.
You guys want to hear it? Put in the chat if we want to hear 30 minutes of Meta, but then it's going to go to Hood at 5.
It's going to go to Hood at 5 regardless. So we're not going to hear Q&A. We're going to hear Mark talk about some of the things that they've been working on.
I don't know whether to root for Meta because I have it in the stock draft, or root against it because I don't like it.
I can't believe you picked it for the draft. I forgot about
I was
that.
surprised. I was like, Roy hates Meta. I don't know how he picked that. But
On paper, I can own it, but like it's when you see like, okay, it's a
like when I saw
stupidly
Roy
obvious
buy it,
opportunity.
I was like, okay, it's cheap. If Roy was ready to pick it in his stock draft.
Roy's selling his soul to win the draft. Okay. We should have the Mark or the Meta call here. The Mark call. We're going to be listening to it for 30 minutes, then transitioning over to the Robinhood call, where hopefully we see our friend Amit here in the audience. Hopefully get to ask a question as well. That should be quite fun. Do you have any idea what you're going to ask?
I was going to ask about Robinhood chain, but usually I think of a question on the spot. So, but yeah, Robinhood chain. I'm really curious where they see the future of that going. It was a great quarter. We got a lot to analyze tomorrow. It was a great quarter, but unfortunately, Meta and Microsoft, broader market, FOMC, it's going to be tough if the semis go down in junction with Hood having a good quarter. So can't complain about the quarter.
Currently right now for us.
No, I'm not going to do it again.
I mean,
Maybe I will. I don't know.
Maybe.
I don't know.
Okay, let's switch over the operators talking. Amit, see you later, brother.
See you guys.
Okay, enjoy.
Into a private mode. Amy, waiting on your begin. Okay, so we are going to go live momentarily. There will.
Okay, I guess they're not live just yet, and I just kicked Amit out of here.
That'll teach him.
Overall, though, I mean, what is the most surprising earnings call for you? Like Robinhood being down almost 4% is mind-blowing to me.
I mean, they're really good earnings, and the stock can do whatever. Like right now, the macro is just rough on like after hours. It's a lot. Other names are down even more, and they've not reported earnings. So
Good afternoon.
Okay,
My name is
call
Chris.
starting.
I would like to welcome everyone to Meta's second quarter 2026 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star, then the number 1 on your telephone keypad. To withdraw your question, again, press star 1. We ask that you limit yourself to 1 question, and this call will be recorded. Thank you very much. Chad Heaton, Meta's Vice President of Finance. You may begin.
Thank you. Good afternoon and welcome to Meta Platforms' second quarter 2026 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as a result of various factors, including those set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.meta.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone. Thanks for joining today. We had a strong quarter for our community and business with 3.6 billion people using at least one of our apps each day. We reached several milestones. Instagram reached 2 billion daily actives. Threads crossed 500 million monthly actives, making it the fastest growing conversation app ever. Facebook has reached more than 2 billion daily actives for a while now. WhatsApp just hit an all-time messaging record, peaking at 30 million messages sent per second during the World Cup final. And also, Kunal Shah just joined as our new head of WhatsApp. He built one of India's most important payment companies and will be a great addition to the team. We also shipped some strong new models from Meta Superintelligence Labs and released new glasses. Overall, the scale and reach of our community across our apps is pretty remarkable, and it gives us a strong platform for delivering new innovations to billions of people. The opportunity in front of us is massive. First, we are now at a point where our investments in AI are accelerating every major part of our core business. They're improving the experience for people using our apps, driving better performance for advertisers, and helping our teams build new experiences and ship faster. Second, we are developing new personal agents that will be the foundation for our next wave of products and revenue lines in the months and years ahead. And third, we see a large enterprise opportunity to sell to businesses, including APIs, business agents, potentially selling compute directly, and other services that we're building for large customers. And I want to spend some time today laying out exactly how our investments are delivering results today and the opportunities that we see over time. For accelerating our core business, we are seeing strong and promising results in several areas. In Instagram and Facebook, I'm very optimistic about our work to integrate large language models into our recommendation systems. LLMs add a first principles understanding of what the content is about and why it is compelling, as well as a deeper understanding of what people are interested in and what their goals are when they're using our apps. So this means that we can show more relevant and engaging content that better reflects people's goals and interests. Our new Muse image and Muse video models will also dramatically expand the universe of content that people can discover across our platforms. There are already 2 large sets of content to draw from, first from your friends and the people you follow, and second from creators that you don't follow. But now there's going to be a whole new and nearly infinite universe of personalized content. This is going to make our services a lot more useful and engaging for people. For ads, we are using LLMs to improve how our systems predict and rank the ads that we show. We've expanded the context that we can take into account around a person's organic and ads activity to determine an ad's relevance, driving significant increases in relevance and conversions on both Facebook and Instagram. And on a dollar basis, our ads business is reporting faster year-over-year revenue growth than any other company's reported ad business. So these AI investments are paying off. We are also seeing a lot of demand for our new AI-powered creative tools. 9 million small businesses on our platforms are now using at least one of our AI ad creative tools, and we're rolling out new end-to-end creative solutions that help advertisers translate performance data into their creative decisions. Muse Image is going to supercharge this. The model can analyze images, improve its own work, and produce better ad variations based on advertiser input. We're getting great feedback on this so far. We also just launched Meta One, a new subscription offering that provides more tools and AI features across our apps. As demand grows, we're going to offer a variety of different tiers and pricing options there as well. And I'm also excited about how AI is helping our teams speed up product development. Earlier this year, we shipped Instagram Instants. We also just launched Forum, a standalone groups app, and Seller, a standalone marketplace app. And I expect it to become a lot easier to ship new apps. So we are planning to build out more ideas and use our recommendation systems to scale them to the people who will find them interesting, as we've done with Threads. It's been a little more than a year since we launched Meta Superintelligence Labs, and our trajectory is strong. In the last month, we shipped Muse Spark 1.1 and Muse Image. Since we rebuilt Meta AI and integrated Muse Spark, we have seen a 60% increase in the number of people interacting with the assistant each day, and that continues to grow quickly week over week. Muse Spark 1.1 is a strong agentic encoding model that is very efficient and excels at computer use, tool use, and multimodal understanding. It's available through our new public API, and we are ramping up distribution through partner channels and more coding agents over the coming weeks. We are also building out features to make it easier for enterprises to adopt Muse Spark, and that is an area that we expect to continue focusing on. One reason that we are so focused on making Muse Spark great at agentic capabilities is that we think that there's a very big opportunity to ship a few types of agents that are aligned with our mission and business. The first, work 24/7 on your behalf to help you achieve your goals and improve your life, your health, your relationships, your finances, whatever you want. The first domain that agents have really taken off in is coding, but engineers are more technical and willing to spend time making those agents work. So to build great personal agents, this needs to be a great consumer product that just works out of the box and is easy enough for billions of people to adopt and use. I'm very excited about this, and we're going to have more to share soon. As we move towards a future where we're all interacting with multiple agents, I think that WhatsApp and our other messaging surfaces are going to become increasingly important. WhatsApp is already the leading surface where people engage with Meta AI, and as we build out a platform for more agents across our messaging apps, we're going to innovate on how to deliver a private and secure AI experience. We launched incognito mode this quarter on WhatsApp and the Meta AI app, allowing people to have private conversations with their assistant that even Meta can't see. We're planning to make strong privacy and security a fundamental part of the agents that we're building as well. I'm also very excited about our progress with business agents. We made Meta Business Agents available globally this quarter on WhatsApp and Messenger, and there are already more than 1 million businesses using them to talk to their customers or complete sales every week. We're rolling business agents out on Instagram now too. One interesting thing about having an agent talk to your customers every day is that it learns over time and can bring all of those insights back to you. So we're building more agentic capabilities to summarize all of these conversations, digest what happened overnight, and surface what customers are asking for. And soon it'll go further, including suggesting ways to grow your business, giving you competitive intelligence and real-time insights into what's working and what's not. And over time, we'd like to build this into a business-in-a-box service that can help you start and run a whole business using Meta's platforms. In terms of how we will monetize these, we have a mix of subscriptions, volume-based pricing, and I expect that we're going to continue to evolve more of these products to be like our ad systems, where businesses only pay us when we achieve results for them. Over time, that will let us run an efficient auction over our compute, similar to how we do that for advertisers today. As AI usage in our products and businesses continues to ramp, we continue to invest aggressively in infrastructure to meet the demand. Yesterday, as part of our Meta Compute effort, we announced a new strategic venture with BlackRock to develop a new 1 gigawatt data center in El Paso, Texas. Overall, we expect that a significant portion of our compute is going to go towards training our models, growing our core business, and delivering personal agents and new products. But we also expect to grow a large business serving large customers as well. We've built our API, we're rolling out business agents, we're getting a lot of offers for compute at a significant premium over what we paid for it, and we have more coding and productivity tools on our roadmap as well. And we'll have more to share on all of this soon. As we get closer to personal superintelligence, we are also going to need hardware that allows you to seamlessly interact with it. Glasses are the ideal form factor since they can be with you throughout the day and they can assist you without pulling you away from the moment. Our glasses remain one of the fastest growing consumer electronics of all time, and we continue adding to the lineup. We just released our own line of Meta glasses in collaboration with EssilorLuxottica, including a style that we designed with Kylie Jenner. They're the first glasses to ship with Muse Spark out of the box so that they can understand what you're seeing and give even more helpful answers. Early sales have been strong, exceeding our expectations, and we're going to have more to share on our glasses lineup at this year's Connect conference on September 23rd, so I encourage you to tune in then. Before I wrap, I want to mention that I just published an op-ed about why I'm so optimistic that we are building a positive future for everyone. At Meta, we have always built technology to put power in people's hands so that they can connect with the people they care about and shape the world in the ways that they want. It's why we've always focused on making our products affordable and accessible for everyone, and it's a strategy that has served both our community and our business well. As we enter this next chapter, that same philosophy is guiding how we approach developing AI. We're the only major company building AI with the primary goal of putting superintelligence directly into people's hands. Rather than centralizing superintelligence, we're focused on distributing it widely and giving everyone the ability to direct it towards what matters to them. That's the way that society has always made progress. I think that these are the right values for building a positive AI future. And if we help build this, then I think that we will continue to build a very strong business as well. So that's everything I wanted to cover up front today. AI is improving our core business. It's making our apps more relevant and delivering better results for businesses. We're starting to deliver more novel products, and we'll have a lot more there soon as well. And we are investing aggressively because the potential is huge, and we know that there are many ways to deliver value here. As always, I'm grateful to all of you for being on this journey with us. And now, here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our segment results. All comparisons are on a year-over-year basis, unless otherwise noted. Q2 total Family of Apps revenue was $60.4 billion, up 28% year-over-year. Q2 Family of Apps ad revenue was $59.4 billion, up 27%, or 26% on a constant currency basis. In Q2, the total number of ad impressions served across our services increased 14%. Impression growth was healthy across all regions, driven by growth in engagement and users, as well as ad load optimizations. The global average price per ad increased 12% year-over-year, driven by ad performance gains, improvements in macro conditions relative to Q2 of last year, and currency tailwinds. This was partially offset by strong impression growth, particularly from lower monetizing surfaces and regions. For the first time, quarterly Family of Apps other revenue reached $1 billion and grew 73% year-over-year, driven primarily by WhatsApp paid messaging and subscriptions revenue. Within our Reality Labs segment, Q2 revenue was $431 million, up 16% year-over-year due to strong growth in AI glasses revenue, partially offset by lower Quest headset sales. Moving now to our consolidated results. Q2 total revenue was $60.8 billion, up 28% or 27% on a constant currency basis. Q2 total expenses were $42 billion, up 55% compared to last year, and included $2.4 billion in charges related to legal proceedings and $1.2 billion in severance expenses in connection with the May 2026 headcount reduction. Year-over-year growth was primarily driven by increases in employee compensation, infrastructure costs, legal-related costs, and third-party AI token costs. Excluding the previously mentioned severance expense, growth in employee compensation was driven by technical hires we've added over the past year, particularly AI talent. The growth in infrastructure costs was driven by higher depreciation, data center operating costs, and third-party cloud spend. We ended Q2 with over 75,000 employees, down 3% from Q1. This total includes approximately 8,000 employees impacted by the May 2026 headcount reduction. We expect the majority of impacted employees will no longer be captured in our headcount by the end of Q3 2026. Second quarter GAAP operating income was $18.8 billion, representing an 8% decline year over year and a 31% operating margin. Excluding the Q2 legal charges and severance expenses, our second quarter operating income would have increased 9% year over year. Our tax rate for the quarter was 16%. Net income was $15.8 billion, or $6.18 per share. Capital expenditures, including principal payments on finance leases, were $31.1 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $784 million. We ended the quarter with $90.3 billion in cash and marketable securities and $83.7 billion in debt. Turning now to the business performance. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we continue to see significant gains from our content recommendation initiatives. On Instagram, global time spent this quarter grew double digits year over year this quarter, largely driven by improvements to our feed and Reels recommendations. On Facebook, video time spent increased 9% globally year over year and over 10% within the US and Canada, where it was driven by ranking improvements. We are finding that LLMs are increasingly capable of delivering ranking and recommendations gains. First, they make our existing systems smarter by understanding what the content is actually about and generating better training data. Second, LLM-powered agents are also helping with engineering development by evaluating content quality, detecting trends, and testing ranking changes. Earlier this year, we reached a milestone of every public Reels and feed post on Instagram being automatically processed through an LLM and analyzed across dimensions from topics to tone, and we're working towards including more surfaces on Facebook as well. These signals can then be passed to downstream applications across ranking, recommendations, and content policy enforcement, which is a key building block toward greater personalization. This quarter, we also began using our Muse family of models to conduct content understanding across signals like video topic classification and summarization, and we've seen positive early results. Finally, our recommendations are also becoming more personalized, surfacing more fresh content while giving people more direct control over what they see. On Reels, we shipped our largest single release ranking improvement to date, combining faster inference with a new architecture that draws on deeper user history to improve predictions. This drove a 15 basis point increase in sessions on Instagram, with particular strength in reshares and time spent, which are both strong indicators of better content to user matching. We are now bringing this to feed where early results look comparable. We are also getting new content to people more quickly. Investments we've made in more real-time infrastructure and modeling improvements on new videos are allowing our largest ranking models to now identify high-quality new Reels at creation. On Instagram feed, over half of all recommended content is now less than 1 day old, more than double from a year ago. We're also giving people more direct control of the content they see. Today, Instagram users can visit the Your Algo page, which lets users write natural language prompts to tune their recommendations. Similarly, on Facebook, we launched Shape Your Feed. Early results show over 80% retention among users who engage with it. Looking forward, we're executing on our longer-term efforts to develop the next generation of our recommendation systems. This includes building foundation models that are designed to power organic content and ads recommendations simultaneously, as well as developing LLM native recommender systems. We hit our first research milestone this half by continuously pre-training a large-scale model with recommendations data and observing healthy scaling laws in the process. We're encouraged by this milestone and expect continued progress in the second half of the year. Turning to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. Here, we continue to enhance our systems to show ads at the optimal time and location. In Q2, we also expanded availability of ads on our newer surfaces, including completing our global ads expansion on Threads. On WhatsApp, we have introduced support for more types of ad destinations and advertiser performance goals in status and continue on track toward our global rollout. Moving to the second part of increasing monetization efficiency, improving performance for the businesses who use our services. Within our ad systems, we're delivering performance gains as we deploy more complex and predictive models. This quarter, we introduced Meta Generative Recommender, a paradigm shift in how our ad system works. Rather than scoring every possible ad individually, we are now using LLMs to reason about ad content and user preferences together and predict the best ad for each person. This makes our ad match.
I saw a bunch of comments saying they're all dying of boredom and a bunch of people are leaving. So I don't think everyone's on board the Meta train here.
I'm certainly kind of tuning it out. So.
No, all good. I'll listen to it another time. That said, we have Robinhood earnings coming on at in about 7 minutes. It's usually a longer call. They have a ton of people either in person, Say Technologies, over Zoom. Roy and I will also have the opportunity to ask a question. I'm not even sure I will this time unless I see a comment in chat that might grip me. But most times I'm honestly looking for a question to say to Robinhood rather than actually needing it answered by them. So, all right. Overall, going into Robinhood's call that we're about to see, they're down 3.3%. The markets in general are having a major sell-off. Why can't I bring this up? What the heck? Wait, something's going on. Okay, there we go. They're down 3%. Microsoft's up 3%. Meta seeing a little bit more of a sell-off, now down 7% again. Fair Isaac Corporation down 11.8. Fortinet up 12.5. Roy, what has your what's caught your attention right now?
Honestly, it's not even earnings. It's an interesting thing on Figure Technologies, which hasn't reported yet. But yeah, it's they had an announcement with the CEO Mike Cagney, or he's the president, excuse me. And on chain, boy, like there's been some massive batches of loans that were sold in a fairly new product category with a new partner. So, but yeah, I know most people don't really care about Figure right now and with rates and everything, but you covered going back to your coverage earlier. You've been on live forever. Did the FOMC event surprise you at all in any way?
No. I mean, there was a 33% chance of a rate hike. It was only Citadel. Every other bank, financial institution said that we were going to stay steady. That's where I would have put my money. Now, I'm surprised by the market's reaction, but the 30-year yields are at something like 18-year highs or something. Pretty wild.
That's certainly a factor there. I would have guessed just because we were at 33% and there was some uncertainty going into this, barring some very hawkish comments, despite the like raise, which wasn't really what we got, that markets would actually really like it and be quite green. And that's why I'm not a day trader.
Really quick, for people asking about Amit, Amit was with us. He is going to be at the Robinhood event. So he's likely to ask a question there in person. So we'll see him on the screen. He was streaming with us a little bit ago, but obviously he needs to work his way from where he was recording to he's probably getting seated right now for the call. But yeah. So overall, it has been a long day. I've been streaming practically since 6:55 a.m. But I mean, it's never a dull moment in the midst of earnings season and FOMCs and a lot of macro data that we're going to see in the rest of the week as well.
For sure.
Okay. Let me make sure that I got Robinhood's call up. Are you shocked by any of the AI spend commentary? I even checked X while that call was going on, and there's been a lot of people voicing their concern for the amount of spend that Meta is still doing, and just saying that, hey, why don't you just make a comment to say that CapEx is going to peak out in 2027? And I think the reason why you're not seeing those types of comments is because they're not entirely sure that that is going to be the case.
Yeah.
You know, Micron is booked out for years. For years. That's going to be a telltale sign of what, you know, AMD looks like, what NVIDIA looks like, what a lot of the photonics names look like, because you're not buying memory in a bubble, right? It's the entire chain. The surprising thing is how much free cash flow Microsoft just put up while being one of the largest buyers in the world.
Yeah, I was going to say Microsoft, the free cash flow really surprises me. And then Meta not raising the top line of the CapEx, given what seemed like pretty big ambitions with the data center play. This at least indicates to me that no, they're going to build out their own capacity. And if they're surplus, then they're prepared to sell it. I think we'll have to see, you know, what they say in their earnings call. I'm sure that they'll get asked about it.
Okay.
Is that the way that you're reading that top line increase or lack of increase?
For Meta?
Mm-hmm.
Honestly, I don't know what it is. I haven't looked too deeply into the numbers. I think that they'll likely be fine. The interesting thing that I think is funny about Meta is that they really don't have any diversification in their revenue. It's just advertisements. But in the future, we're likely to see massive amounts of either Meta cloud compute or whatever they're going to name their new cloud business, like selling GPUs that are in excess, similar to what SpaceX did, or MetaMuse Spark APIs really start to take off because they might have a frontier model. People don't know this, or it's not often talked about, but the level of compute that Meta has is on par with the levels and future outlook of what OpenAI and Anthropic have. There's really three things that you need to make a frontier model. It's great talent, great data, and great compute. And Meta has all three. So MetaMuse could be unbelievably huge. Their cloud space could be really big. I don't know which one needs to pop off, but a nice new catalyst, I think, would be a good sign for the stock.
It's starting.
Okay, ladies and gentlemen, enjoy the call. You're on Zoom, Roy. It hasn't started in the...
Slightly ahead. Yeah, it's starting very soon.
Okay.
Whether you're tuning into the live stream or here with us in person.
It's a little quiet. One sec.
With us today are...
I can turn it up.
Opening remarks and then open the call to Q&A. During the Q&A portion of the call, we will answer questions from the audience, which include...
Really quick, it sounds a little bit quiet right now. Really hoping, I already have it at 150%. Really hoping that Vlad's mic and Shiv's mic is a little bit different. In case it does come on a little loud, I apologize for blowing out your ears. So for the earbud holders, just be a little bit safe.
we continue to monitor are described in the press release we issued today, the earnings presentation, and our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP measures we consider most directly comparable can be found in the earnings presentation. With that, please welcome Vlad and Shiv.
I just have to mute that song really quick. Gosh. They love the theatrics. Okay, we'll jump in. I'm so sorry. I can't play the music.
Wow. Thank you guys for joining. Thanks for the warm welcome, and it's awesome to see a packed house in here. We're back again at NASDAQ in New York City, taking a big bite out of the Big Apple with Shiv here and Chris. Largest audience yet for an earnings event. I remember, Shiv, last year it was when we did the first event with analysts in person, and we were worried, would anyone come? And not too many people did, but the people that did had a lot of fun, and now I'm glad to see the word has spread. So it's really great to see shareholders, analysts, buy side and sell side, content creators in the audience here. It's been about 5 years, actually I think exactly 5 years since we rang the bell at the NASDAQ. And in that time, we've really accomplished significant growth, and we've delivered for our customers. In that time period, since IPO, total platform assets have quadrupled, and adjusted EBITDA has more than 8x'd. But one thing hasn't changed: why we exist. Robinhood exists to make everyone an owner. And I think that's a unique vision. I don't think a lot of companies are going after us. It's a powerful vision, not just for each individual customer, but I think also for society at large. I think that a society without ownership, broadly distributed, is very fragile, and we think broad ownership is essential to a free, stable, and prosperous society, because when more people have stake in the outcome, more skin in the game, they're literally invested in the outcome, and we want more people to be invested in the companies of our great country. And I think we've just scratched the surface for what we can do there. To achieve our aspirations of making everyone an owner, we're focused on 3 things. Number one, being number one in active traders, which will allow customers to own any tradable asset. Number 2 is being the leader in wallet share for the next generation, bringing ownership to the entire family. So the whole family, and really lifelong ownership. And then number 3, building the leading global financial ecosystem, which is really about expanding the ownership that we've been able to contribute to in the US, worldwide. Billions of people around the world could benefit. So in Q2, our continued product velocity across these 3 arcs led to a bunch of records. On the active trader front, core business is humming, which drove market share gains and record volumes across not just equities, but also options and prediction markets in the quarter. Also, have to highlight, Rothera started supporting Robinhood prediction markets and has rapidly become a top 3 DCM, so top 3 designated contract market in the US. We also launched the first version of agentic trading, which allows customers to build AI agents to trade equities, options, and crypto, and to have access to Robinhood tools and features. We're very excited about that. So looking at wallet share, Trump accounts have officially launched, which is a historic step towards enabling broad financial ownership from birth. We're honored to serve as broker and sole initial trustee, helping millions of American children become owners of our great economy from day one. We also crossed an exciting milestone for the Robinhood Gold Card, 1 million cardholders. Yeah, that's a number we're very excited about. And actually, the Gold Card is now driving over 17 billion in annualized purchase volume. So it's being heavily used. I think a lot of people in this room maybe have them. Plus 3 billion. We broke 3 billion in banking deposits since we began rolling out just last November. And all of this put together contributed to record net deposits. Customers are continuing to trust us with more and more of their assets, which in turn help drive total platform assets to record levels in quarter as well. Finally, global financial ecosystem. We closed our acquisition of WonderFi in Canada. We received our capital market services license in Singapore, and at our crypto and international event, the world is flat, we introduced a suite of products, including Robinhood Chain, which is the first chain purpose-built for real-world assets. And we've been seeing a lot of great initial traction on all these products, but in particular the chain. So we saw over 12 billion in DEX volume. So that's over 12 billion in trading volume on decentralized exchanges after launch, which made it one of the largest chains by transaction volume over the past week. It was also the fastest chain to get to 100 million transactions. I think we're well north of 150 million transactions at this point, which is very, very cool. Also, customers have deposited over $200 million into Robinhood Earn. So remember, Robinhood Earn is our stablecoin lending product that's powered by Robinhood Chain and our stablecoin USDG. So now it allows customers to earn 7% APY, which is a competitive rate. So 200 million so far, and it's just been a few weeks. Stock tokens, which I'm perhaps the most excited about. We're very excited about bringing ownership of real-world assets to everyone in the world. Stock tokens are available in more than 120 countries, which allow many people around the globe to experience the idea of ownership. Tokenization makes it possible to expand exposure to high-quality assets like U.S. stocks to every single person with an internet connection. So if you have a smartphone, you have an internet connection, you can connect to our blockchain, you can get exposure to US stocks, and that's very exciting. Overall, we're now serving over 1 million accounts outside the US, and very much at the beginning there. So continued product velocity across these three arcs led to record results in Q2, record revenues of 1.3 billion. That's up 32% from last year. Record net deposits of 22 billion, which is a 28% annualized growth rate, and record gold subscribers of 4.8 million, which is now 17% attach rate relative to our net funded accounts. Now I'll hand it over to Shiv to discuss our results in more detail. Shiv?
All right. Well, thanks, Vlad. Before getting the results, I wanted to share 3 big takeaways from the quarter. To start, the core business is going strong. So net deposits were a record 22 billion, a 28% growth rate, and we drove new records across equities, options, prediction markets, and margin. It's also great to see top of funnel growth picked up as we added nearly 1 million funded customers in the quarter. Second, this led to both record revenues up 32% year over year, but also another quarter of strong profitability with 57% adjusted EBITDA margins. So we're continuing to drive strong top line growth and profitability at scale. And lastly, we're dialed in on expenses. So we're lowering and tightening our outlook, even as our core businesses grew to new highs and we layered on new products. So let's review our Q2 results compared to a year ago. As we said before, revenues grew 32% to a record 1.3 billion, and this was driven by strong growth across the business. So transaction volumes increased to record levels across the majority of our asset classes, and we drove market share to new highs. Interest earning assets also grew, and we had records across margin, our credit card book, and also Robinhood Banking. And finally, other revenues were up as gold subscribers reached an all-time high of 4.8 million, and we started generating revenues for our work on the Trump accounts. And while product velocity continues to increase and revenues continue to grow to new highs, we also stayed disciplined on costs. So adjusted OpEx and SBC was 641 million, as we managed expenses well below our prior outlook range, all while including costs related to 2 new businesses, Rothera and WonderFi, that were not included in our prior outlook. As we look to the rest of the year, while we're adding costs related to Rothera and WonderFi, we also continue to get even more efficient in how we operate. And this is allowing us to both self-fund Rothera and WonderFi costs, but also remove additional costs from the system. So we're lowering and tightening our 2026 outlook for adjusted OpEx and SBC to a range of 2.675 to 2.775 billion. We believe it is a competitive advantage to not only be a growth company that can invest for the long term, but also leverage our lean and disciplined operating model to self-fund a meaningful amount of these new investments. So you take it all together, the strong top line growth and expense discipline we drove in Q2, it flowed to the bottom line. So adjusted EBITDA was $741 million, up 35% year over year, and a 57% margin. And earnings per share was 62 cents, up 48% year over year. So if we turn to capital allocation, there's a few top of minds. In June, we opportunistically raised $2.2 billion of capital to give us even more flexibility to invest for future growth. We believe we have a massive opportunity ahead of us, and the capital gives us even more capacity to go after it. And we raised this capital at attractive terms for shareholders, with both a 0% coupon and no net dilution until our share price exceeds $300. And even while raising capital, we are prudently managing our share count. Year to date, we've repurchased 7.5 million shares for $664 million. And as we said before, the denominator matters. So overall, we're really proud of the results we drove in Q2, and Q3 is also off to a good start. July average daily volumes compared to a record Q2 are in a similar area for equities, options, and event contracts. And July net deposits are tracking towards the $4 billion area, and this does not yet include deposits into the Trump accounts. So stepping back, we feel great about all the products we're shipping and the growth that we're driving. But we've also heard from some investors that it can be difficult to know which growth areas to focus on. So I wanted to share 3 areas that we think are important for measuring progress and success on our long-term vision. First, net deposits. Customers continue to trust us with their hard-earned deposits at over 20% growth rates. As we drive strong net deposit growth, assets compound, and this leads to strong business growth. Second, Rule of 40. We're driving double-digit revenue growth with strong adjusted EBITDA margins, a combination that has made us more than a Rule of 80 company for the past few years. We think it's important to be both a growth company and a company that operates with strong margins. And all of this at our scale of over $5 billion of annual revenue, which is quite rare. And third, $100 million ARR businesses. We're excited to share we're now up to 13 businesses that have reached this level as we rapidly ship for customers, including 2 new more that we added just this quarter, Robinhood Legend and the credit card. As we build out a family of financial apps, we plan to add even more 100 million ARR businesses in the year to come. So if we keep making progress on these areas quarter after quarter, year after year, the financial results should follow and take care of themselves. And as we've shared before, our financial North Star remains the same: maximize earnings per share and free cash flow per share for shareholders over time. So before we move to Q&A, I'm actually going to turn it back over to Vlad to show us a few of these great products that we've recently built. Vlad?
Thanks, Shiv. I want to try something a little bit different, if I may. So a lot of you are probably familiar with our main app, but over the past few years, we've really expanded from a single trading app to a broader system. So what I wanted to do was just give you a little tour of some of the other family of apps that we've built and we've really been improving upon very recently. So here they are, our four apps. I won't show you the main one, but why don't we start with this one here, Trump accounts. So again, this has been an incredible collaboration between Treasury, National Design Studio, Robinhood, our teams, and BNY. And I believe it's the best digital experience the government has ever delivered. Actually, Secretary Besson a couple of days ago said this was like the best product launch that the government has ever done. And I think that's high praise because, I mean, NASA, I think, would be in that. Anyway, this is my kid's Trump account. So if you notice, you can select your kid there. One of the things that I think we've done really well, and maybe you'll recognize some of the design language and inspiration from Robinhood, is showing the magic of compound interest. And that's front and center. So you not only see the account values today, but you can see what happens by age 18. And you can even simulate, okay, if I add, $50 or $130 per month, what can we expect to happen with compounding to age 18? You can even see, age 60. So you extend it to retirement age. And what we really wanted to do was kind of illustrate how magical it is and get people thinking long term. You can scroll down here and you can actually get a feeling for the companies that are in the low cost ETFs. And then this is my favorite thing, contribution flow. So we have this awesome illustration and we make it super easy to contribute. So if you want to do $5, my Robinhood checking account is linked and you have this like coin animation that fills up your piggy bank. You can make it a recurring contribution. And actually the level of the coins in the piggy bank, this is a nice little detail, corresponds exactly to how close you are to your annual giving limit of $5,000. You can also share here. So there's a QR code you can easily share with friends or put on a registry or have for birthdays. You can share this link at the bottom directly too. And folks can just contribute without even having an account through Apple Pay, which I think is cool. Here's the educational content. And we try to make it easy to just go through and learn the basics about the stock market and investing. And that's the idea. There's plenty more coming. We think it can be the best charitable giving vehicle. So we're working hard on that. Michael Dell, as you guys know, gave a very large donation with his wife, Susan, and many others as well. We're working to make it easy for employers to donate. So there's a $2,500 tax-free employer limit per year, which Robinhood is participating in. And so if you guys don't have it, I definitely recommend picking it up and getting it for your children or grandchildren. And you should expect that it just continues to get better and better. So that's the Trump Accounts app. And again, great collaboration between Treasury, National Design Studio, BNY, and our team. Let's take a look at the banking app. That's the second one up here. We believe we're building the best digital banking experience in the market. You can get a sense of like the premium Art Deco feel. And we wanted to build a banking experience with no compromises. So usually other neobanks have sacrifices that you have to make from the experience being purely digital. But we want it to be a true private banking product. One of the things people love about it most is your APY. So we've now made it so that you can earn high APYs on both checking and savings just by setting up direct deposit and being a gold subscriber. So no minimums. And people really love not having to think too hard and concentrate on moving their funds back and forth to make sure the bulk of their money is earning the highest yield. So we just give you 3.5% automatically on every account. And customers love it. So far, about 40% of customers are signed up for direct deposit, which is a great attach rate. You can also see down here, we've got the rewards menu, which we've done a redesign to make it easier to get into. So 3% cash back, you can see you can upgrade to the gold card, and we have all sorts of other reward redemptions. And then down here, that's the family tab. So you can add family members. This is really the first banking product where the family is the first class citizen. And then all of your transactions are down here. So really, I think this is a key part of building a financial ecosystem for our customers. Customers direct deposit into banking. They can spend with their credit card. Cashback flows back into brokerage, which kickstarts or turbocharges their investing. And we make it incredibly easy to do that. Also, just one note, I'm not going to show this, but we just started rolling out the Platinum card, and it's looking really good. I think we've gone through a lot of the feedback that we had on launch, and I encourage you guys maybe after earnings to check out the website because it's looking really good. All right, let me show now the third one, which is the Robinhood wallet. So as part of our announcements that the world is flat, we launched Robinhood Chain Mainnet. And of course, a robust chain like Robinhood Chain needs a robust wallet to match. So let me show you how customers are using it. Now, I'll do a caveat. I'll show a lot of features that actually aren't available in the US. So these are really just ex-US products. So think of it that way. They're not available here, but people in over 120 countries outside can actually use them. So you'll see right away, similar design language to Robinhood, but everything is powered by crypto technology. One of the tabs we have on the bottom there is perpetual futures. And this chain, the wallet itself is well integrated into Robinhood Chain. So the chain is a first-class citizen. So here through our partnership with Lighter, you can, if you're an active trader outside the US, get leveraged exposure to not just crypto perps, but also commodity perps and single stock perps as well. And we make it easy to add funds, deposit, and withdraw and place trades. The other thing I'm very excited about is stock tokens. So here I'll show you what they look like. This is NVIDIA. So if you're a customer outside the US, you can get exposure to NVIDIA through stock tokens. And they have certain advantages over traditional stocks even. So they're tradable 24/7, including Saturdays and holidays. And you can even send it on chain. You can see the address. You can receive just like you would any crypto. And this makes it really easy to expand ownership worldwide. All you need is an internet connection and to be connected to the blockchain. And looking ahead, we're going to continue to push on this. We're working on adding lots more stocks and really pushing on tokenization of other real world assets. We have a lot of momentum here, so a lot to do. And there's plenty of other products in the pipeline. So we have our third annual Hood Summit in a couple months. The Engines of Creation live from Houston, Texas. So stay tuned for that. I think that'll be very exciting. With that, Chris, unless you want me to show more apps, we can go to Q&A.
Thank you very much, Vlad and Shiv. For the Q&A session, we're going to start by answering shareholder questions from Say Technologies. And after the Say questions, we'll turn to live questions from our audience and then go to the dial-in participants. So I'm going to kick it off with our first question from Say, who should be joining us live. Zach, are you joining us?
Zach. I don't see him. Well, I do see a blinking cursor.
Hello, do you guys hear me?
Oh, there you are.
Hey, everyone. Happy to be here. Just wanted to know, what is the goal of Robinhood Social and when will it go live to the general public?
Thanks for the question. I also noticed you are on Robinhood Social, if I'm not mistaken. And there was some discussion on Robinhood Social about this question. So it's very full circle. Yeah, the goal with Robinhood Social is actually Robinhood up until now has largely been a tool to place the trade, but the idea for the trade would typically come from outside. So you'd get the idea somewhere from the real world and then come and place your trade. And so we asked ourselves, can we actually help customers learn from one another? Can we take advantage of the large community that we've built? And can we make it so that we can help you with idea generation. And so far, we're seeing great early signs. And one of the advantages that we have compared to other social media platforms is, since we have the trading data, we can make sure that everything is validated. And when you say you've made a trade, it's actually real. And you can see that the customer actually has the portfolio that they claim they have. So we're adding more and more features. The goal is to get it out to everyone by the end of the quarter. And what we're doing is we're just iterating and making sure everything, like the feed ranking algorithm, all of the functionality in the posts, are tuned before we make it available to everyone. But we like what we're seeing, so we feel pretty good about rolling it out before the end of the quarter.
All right.
Wow. Yeah. Thank you so much.
Thank you.
All right. Thank you for your questions, Zach. Next question is coming from John.
Hey, John.
Hey guys, hey Shiv and Vlad, thanks for taking my question. Mine's on the Clarity Act, and I understand it's still moving through the Senate, so things could change. But could maybe, if something similar were to pass, could you give an idea of what would be the most impactful aspects of that to Robinhood, and if there are delays, any impacts as well?
Yeah, totally. I'll field that one. So I think the Clarity Act is very, very important, because while the current administration has been great and really is the first crypto forward administration that's embracing the new technology, we want the foundation of the industry in the US to be durable. So we don't want the floor to be shifting out from under us every 4 or 8 years, and new rules to be put in place. Or so I think that in order for the industry to really grow, stability from regulatory stability is necessary. And that happens through legislation. So we saw that with Genius. I think Clarity takes it one step further. And in particular, one of the things that we've been pushing hard on, as you saw earlier, is tokenization. We've been investing in our tokenized offerings. We think that's going to be a big industry. We're pushing that outside the US. You see some of the advantages already just in the past year, from like V1 of our tokenized products to V2. It's like now fully on chain. Now it's 24/7 trading. It's like you can send and receive, fractionalization by default. So there's lots of advantages. And we think it would be a shame if the US didn't get to benefit from all those advantages. So we're excited about that, all of the aspects of it. And we think Clarity helps take us one step further. But also, we're not standing still. We're pushing hard on our on-chain and traditional centralized products. And we're making sure we continue to innovate overseas in some areas, but otherwise, with Robinhood Earn and other on-chain products in the US. So we think we'll be good regardless, but of course, Clarity is going to be very, very important to making the most out of all of these products that we've been building.
Cool. Thanks for taking my question.
All right. Thanks, John. And the last question from Say comes from Joe.
Hi, Vlad and Shiv. Can
Hey,
you
Joe.
give us an update on early traction with Trump accounts since the July launch? Specifically, the number of accounts opened, assets flowing in, and how you're thinking about long-term contributions to net deposits and assets under custody?
Oh, yeah, great question. Yeah, we've been very pleased with the progress thus far. So 7 million children have signed up. We've seen over 1.5 billion in, or nearly 1.5 billion, I should say, is the number of contributions into Trump accounts already. And again, that's before a lot of the philanthropic contributions have started flowing in. So yeah, we think that this is going to get to tens of millions, and we're working aggressively to do that. And obviously, contributions we believe will continue to grow very rapidly from here. And it'll take continued hard work. I think the great thing about programs that have success is people want a lot more things. They want them quickly, and I think with our partners, we're working hard to deliver. So on deck soon, making it so that employers can fund the Trump accounts of their employees, making a great philanthropic experience. I think for folks that want to donate and to be philanthropic, there's actually poor options available right now. There's not great options. It's kind of, there's no default option, at least. You have to evaluate charities. You have to figure out, are they being wasteful with their fees? Is the money actually getting to where you want it to get to? And I think this can provide a default, great, low-cost mechanism. So we're excited about that. And it's just the beginning.
All right. Thank you, Vlad. And that concludes the say portion of our Q&A. So we're now going to go to Q&A from our live audience. We ask that each person limit their questions to one, and please raise your hand if you'd like to ask a question. All right. Can we get mic to Dan Dolev?
Hi, Dan Dolev at Mizuho. Congrats, Vlad. Congrats, Shiv. Amazing quarter. I think what surprised us the most on the positive side was the amazing growth in the funded accounts. Maybe you can shed some light on what part of that is structural, what are you doing, and maybe a quick update on the progress in Europe and how that is going. So very impressive there. Thank you.
Yeah, I'm happy to start with that one, Vlad, give you a little
Absolutely.
break.
Thank you.
So we said on the last quarter, we were making a concerted effort to regrow top of funnel. And as you mentioned, really great to see the progress. 1 million funded customers, the most we've added in a quarter in nearly 5 years since the IPO. There was a variety of different vectors. So it wasn't any one thing. Really strong market backdrop, that definitely helped. We had a lot of new products that came out, banking, credit card, for example, those contributed. Strong organic growth. We also had the SpaceX IPO, which helped. We had an acquisition in the quarter, which provided a couple 100,000 accounts, and we continue to grow overseas. And so what it's showing is just the power of the ecosystem or the financial apps that Vlad was saying. In any given time, there may be a couple different vectors that are growing. And this quarter, we saw a lot of them hit at the same time. And we're going to keep focusing on this. So whether it's through new products or marketing, it's going to be one of our top KPIs going forward.
More to do.
Oh, sorry, Vlad.
Oh, I just said there's more to do. So.
All right. I think moving from the front row to the second row, Dan Finnan.
Yeah, thanks. So wanted to talk on prediction markets and how you're thinking about sustainability as we exit the World Cup, bridge to football season, just how you think about the long-term durability of this kind of asset class and what you're seeing outside of maybe some of the sports stuff related to macro or bigger events.
Yeah, absolutely. I mean, I think that the great thing about prediction markets is there's events all the time. I mean, you mentioned football season, that's coming up. There's also the midterms, which I think are extremely important. I mean, they're going to be a topic of discussion, and of course, customers are going to want to trade them and hedge their portfolios. Yeah, and there's events just on a consistent basis. So we're gearing up for that. We're making product improvements constantly. We're making pricing improvements. Rothera has gone live, and I think the World Cup was really a proof of concept there, and we're looking to scale that rapidly and make it much bigger, with the goal of providing great pricing to our customers. That's really how we think about it. Can we route to multiple venues with the goal of making sure, as a customer, you get the best deal possible on Robinhood?
All right. Thanks, Dan. Let's next to Dan, and there are a lot of questions in the room, so we'll keep the mic moving around. So David Smith, do you want to take the next question?
Hey, thank you. In the past, you've spoken about how it's typical for new customers to come to Robinhood based on interest in one particular product and engage with you for more products over time as they become more familiar with your offerings. With the really strong prediction market engagement we saw in June and seemingly continuing into July, can you help us get a sense of how much came from existing prediction markets users, existing Robinhood customers who maybe were new to prediction markets, and also from new customers who joined Robinhood in the past month or two to transact with you in this product?
Shiv, how do you feel about that one?
Yeah, I'm happy to take it. So we've said before, when you come to Robinhood to do one thing, you tend to do more. A couple things we'll point you to. New customers still sign up for gold about 40 to 50%. So customers come in, their journey is they come for something: equities, options, prediction markets, crypto, banking. They discover gold, then they discover other products. What we're seeing is, regardless of what product you come in for, you tend to sign up for gold and you tend to adopt others. So one thing we looked at, if you're a prediction markets customer, for example, you're actually more likely to have a retirement account with Robinhood. And so any vector you come in, whether it's banking, prediction markets, credit card, you tend to adopt others. And so I'd say it's just one of them that we saw were strong in the quarter. Banking was really strong. That's been a really nice new vector that's been coming in. Credit card as well. We said we have over 1 million customers there. Q1 and Q2, you still have a little bit of retirement season, so you saw some people coming from there. And then whether there's new events in the prediction market, such as the World Cup or the midterms coming in, they come there. The last number we shared was we had about 1.5 million people that have used the prediction markets. That number is now closer to 2 million, so continue to grow nicely there. But I think the main takeaway is it's across all of the different products, and people are coming in and adopting multiple products at the same time.
Yeah, on the marketing side, we continue to see strong ROIs, and it's diversified. So strong ROIs on prediction markets, but also gold and some of the active trader offerings as well. And I think we're in the fortunate position of having it be working really, really well across multiple fronts.
All right. Thank you. Next question, maybe Devin Ryan back in the front row.
Thanks so much, Devin Ryan, Citizens. Hey, Vlad. Hey, Shiv. Question, Vlad, you mentioned version 1 of Agentic, and obviously is still fairly new, but can you talk about like what you're learning with customers that are using that? How is their investment performance? Is there anything else interesting that you're seeing with their behaviors? And then how does that then map to version 2.0? I know you guys are very focused on bringing these capabilities to all of your customers, and that's probably where this becomes a much bigger deal for Robinhood. So how do we think about mapping that out and what that will look like and when? Thanks.
Yeah, I mean, since we're the first major platform doing this, we wanted to start fairly conservatively, right? So we started with stocks and also started with the Agentic account being separate from your main account. And so what you typically see there is customers fund it with a relatively small amount of money and link their agent. Of course, we've expanded it since then. So now options are tradable with Agentic as well. And we've seen customers do really interesting things, like they can put together really complex and sophisticated strategies. Crypto is coming soon as well. And you know, we're going to expand the toolkit to cover as much as possible from the entire Robinhood ecosystem. We've had over 100,000 people actually integrate and open up Agentic accounts, which has been very cool. Yeah, the AUM in Agentic, or the trading volumes, have also been growing, and that's been good to see. If in terms of friction, I think one piece of friction has been that not everyone loves, surprisingly, going to a Codex or a Claude Code and kind of stitching together these two apps. You have to have quite a bit of sophistication in order to do that. So, you know, we're thinking, how can we make that even easier? And also, in many cases, the models themselves aren't familiar with being used for trading. So sometimes they'll fight you and they'll say, well, I don't know, I don't really want to trade. And you kind of have to work hard to get it to do what you want to do. And yeah, we're hard at work addressing both of those things and other things.
All right. Thank you, Vlad. Next, let's go to Christian Blue, sitting next to Devin Ryan.
Thanks for the question, Christian Blue, Autonomous. Vlad, I think you called out Rothera as a top 3 DCM. So I'm just trying to think through longer term how your vision around having a DCM, having retail distribution. Is there a possibility here that you could further build that out, whether it's perps or traditional futures, to take on maybe the top 2 DCMs out there?
Yeah. I mean, obviously, we're top 3 after 1 month, but the goal would be to keep growing that, right? We're not satisfied just with where we are after just a couple of months. Um, and yeah, I mean, I think the roadmap on the Rothera side, not speaking for them because it is a joint venture, is to continue to grow, add more capabilities. Of course, um, you know, we they're definitely focused right now on uh, the prediction markets event contracts, but over time you should see that expanding. And in terms of you mentioned perps, we also have perps not just on chain like I showed you, but through our Bitstamp exchange overseas, where we've been rapidly increasing the scope of the perps offerings, now offering, you know, commodity perps. And you should see that that inventory should expand and grow over time as well. So I think our customers through the Robinhood retail apps will have access to the best products from multiple exchange providers. And you know, our job will be to stitch that together, make it really clear what the costs are, and also make those costs as low as possible for the customers. But you should assume that it's multi-homed and that, you know, the customers can get the best of everything.
It can also be a B2B business over time. So we can onboard additional FCMs. So right now we're laser focused on making sure the Robinhood customer gets a great example. But when you think out longer term, there's no reason why this can't be a large institutional business as well.
Christian, if you'll hand the mic right behind you to Ramsey, that'd be great.
Hi, Ramsey LaSalle from Cantor. Thanks for taking my question. Now that building on some of your comments and some of the prior questions, now that Robinhood Chain is live and thriving, how should we think about the broader DeFi roadmap for you guys? You've got obviously tokenized assets, Robinhood Earn, perps in your wallet I saw. What other on-chain services could be the next sort of growth opportunities? I'm thinking maybe like lending and borrowing or other yield generating type products.
Well, we already have that through partners. You can build, you know, lending and borrowing pools on chain. People have started building really interesting stuff. I think one of the really cool things about seeing so much volume, again, fastest chain to 100 million transactions, is you know, a lot of other chains have to do a lot of work to get third parties to integrate. I mean, we were fortunate to get pretty much all the major wallets and protocols to integrate with us over the past couple of weeks because they saw the volume. And then that in turn, when you're a developer thinking about what chain to build for first, you're seeing all this momentum, seeing all the wallets, and we've gotten a lot of developer activity too. And we've been among the top chains in terms of developer activity. And yeah, some of the interesting things are developers building things that compose with the real world assets, the RWAs. So all kinds of things that utilize the stock tokens in interesting ways, in ways that we haven't thought of. And our roadmap will be, of course, making the infrastructure better and better, making the APIs cleaner. The block speed and block times are quite good. So it's a great chain for developers, but could continue to get better. And just adding in more RWAs, more stock tokens, expanding to all kinds of other asset classes as well, which we're already hard at work on. And you know, we think that the unique thing is us supplying the RWAs as a key primitive of the chain, making sure those work really well, and then seeing what other developers can do to compose them.
All right. Thank you, Vlad. All right. So Ramsey, right behind you, James Yarrow has his hand up.
James Yarrow, Goldman Sachs. Thanks for taking the question. I wanted to touch a little bit more on perps in the US. What's the appetite to add them in the US brokerage? What are the hurdles to rolling them out? And I guess, are you looking to roll them out in the near term, CFTC approval permitting?
Yeah. So as you can imagine, we've been in conversations with CFTC, and they've been constructive. And yeah, we are making progress. So I don't have specific things to share, but I think we feel really good about our customers having a great perps experience, and we already have it in Europe. So the work is not a large amount of work.
All right, thanks. James, can you pass the mic immediately to your left? In this
Hi, I'm
fun game of
Daniel.
checkers we're playing.
Are there plans to add support for foreign stocks? Right now, investors have to buy ETFs to get exposure to certain foreign companies.
Yes, in short, yes. Obviously, it's on our roadmap. And over time, you should expect that as a Robinhood customer, you have, we not only want to give US stocks to customers all over the world, but we want to give foreign stocks to customers all over the world, including to the US. So we're going to build out a marketplace and a real, I think our common infrastructure could be a real asset there. Yeah, unfortunately, it's not one of those things I can just snap my fingers and we're connected everywhere, even though I try. But yeah, it's definitely top of mind for us. Yeah, and it's great to see customers always, the active traders always want more things. So we're always busy, and we love that.
All right. If you could pass the mic to your right and back one row. All right, thank you.
Hey Vlad, hey Shiv. Trading volume, 2+ million of monthly transacting users, I think close to 500 million of stablecoin supply.
Yeah.
What could go right with Robinhood Chain? Because you could offer the opportunity of having the Robinhood app to everyone globally. Like, what could go right?
I think a lot could go right. And thank you, by the way. I've been enjoying your content and your analysis.
Thank you.
Yeah, on X, it's been really good. Yeah, I mean, I think that we built Robinhood Chain to be purpose-built for real-world assets. I should clarify, I like memes as well. I'm like, yeah, you know, they always get a little upset at me. You know, Robinhood was one of the original, I mean, we kind of created this market in so many ways. So whatever it is you want to build, Robinhood Chain can be the permissionless home for that. Our unique contribution is the real world assets. And I think we're doing really the difficult work on the liquidity side, on the regulatory side, to make sure we safely bring all of these assets on chain and make them useful. So we started with a first set of stock tokens. We're going to grow that over time, make them fully DeFi enabled. And then we're already hard at work thinking about other types of real world assets that we can add. And I think you're already starting to see some of the activities. Developers are doing really interesting things that I hadn't thought of. And yeah, I think our job is to give them better and better tools to do it. And I think the enthusiasm has been great, but there's obviously much more to do. And we're never mistaking and confusing enthusiasm with complacency. So we know that we just got to keep building and making sure that it's the most useful chain for developers and all of our traders.
All right, thanks, John. Can you pass the mic a couple of rows up to Craig? Thank you.
Hi, Craig Moore with FD Partners. If I could just ask a question about the quarter. You had a disclosure in the deck showing that you're trending toward roughly 4 billion in net deposits. That's down quite a bit from June, and it's the lowest of the year. So I was wondering if there's any commentary around that, and does it have anything to do with, well, I was also want to ask about the health of investors considering the drawdown in semis and what's been happening in the market. Thanks.
Yeah, I'm happy to take that one. So our goal, as we've said, is 20% on an annualized basis. I don't look at any particular quarter and month. There will be things that change from time to time. If you look at year to date, including July, we're still well north of that 20%. As you mentioned, we had a really strong Q2. Great to see the engagement. It will fluctuate from time to time, but I don't read anything into it. Net deposits have a variety of factors. It's what's going on in the macro. It's when do we launch new products. There is some seasonality. Summer tends to be a little bit slower. What promotions were going on. And so what we're focused on is, can we keep delivering for customers? Can we keep doing these new products? And then over the fullness of a year or even longer, we should be growing at about 20%. And everything we're seeing is that still happening. In terms of the health of the customer, very healthy engagement. And so our customers tend to be techno optimists. They tend to be younger. They tend to believe. And so they use some of these drawdowns as ways to buy. And so on down days or down months, we tend to see really strong net buying. That's what we saw in Q2, and we're continuing to see that. As I shared July, the average daily volumes are very similar to the Q2 average. So continuing to see strong net deposits there. And everything else that we're seeing is the health of the customer is very strong.
Yeah, and I'd say we have some good long-term tailwinds to that growth. So it's not just, you know, the short-term things like promos and the macro, but we're building more durable engines of net deposit growth. I think banking has been a great success thus far, and it's still early. It's not yet fully integrated into the main app or the ecosystem. So I think we have more room there. Advisor network. I think that's the beginning of what could be a really, really strong RIA integration. And as you probably know, the RIA channel is a good, durable, consistent source of net deposits. We've been seeing good growth from multiple brokerage accounts. And then, of course, trusts is rolling out. So, you know, there's a lot of people of higher net worth that use trusts and that have all of their wealth there. So I think as we keep adding these things and keep supporting, that should just be a long-term durable tailwind for our business and net deposit growth.
All right, Craig, would you mind passing up one row to Alex?
Hi, Alexander Baton here. Thanks for taking my question. So Peter Thiel once said when asked if he regretted selling Facebook at 100 billion valuation, that each 10x up to 100 billion he saw as equal difficulty. But 100 billion to a trillion he imagined would be significantly harder. In hindsight, Facebook's move from 100 billion to a trillion may have been its easiest 10x because it had already reached scale.
I like where this is going.
As Robinhood approaches that $100 billion market cap, how do you think about the difficulty of the next 10x? Could getting from 100 billion to a trillion actually be the easiest because the scale and operating leverage you've built? What will it take for Robinhood to surpass market caps of legacy financial institutions? And do you see AI supercharging your global domination plans?
Oh. I've got some board members in the audience too. I think getting to a trillion will be very, very difficult. I don't think a financial company has ever hit a trillion market cap. But I think it can be done. As you mentioned, there's a lot of new things that are changing rapidly that I think we're on the forefront of. So it's not just, you know, growing our brokerage business and expanding it internationally, but it's also agentic finance. And can we build great tools for agents? And can we see a world where, you know, that just a lot of the activity, if not the majority, goes in that direction. You know, we're building for that. Can we use the early success of Robinhood Chain to actually make all assets, make everything that you have in the U.S. available to billions of people worldwide, and then we benefit from, you know, the tailwind of the rest of the world getting wealthier and the rise of the global economy as well by giving them access to things. Private markets, I'm very excited about, and you know, we've seen Robinhood Ventures Fund 1 and now Robinhood Ventures Fund 2, which is beginning the roadshow. So we have the prospectus live. That one focused on early stage, and the goal really with Robinhood Ventures is for us to be there for individual investors to have exposure to companies at the earliest possible stages, but really across the entire life cycle, including early stage. Yeah, and so I think putting all these things together, I see multiple axes that the company could 10x, and I think we're going to pursue all of them.
Yeah, you know, we don't comment on the stock price specifically, but if what we've said before is we believe we can 10x the business over the next 10 years, and that's through a lot of the vectors Vlad shared. When you look at assets are the greatest predictor of what's going to happen in financial performance. We're super excited. We're nearly 400 billion today. But if you look at some of our competitors, they've got to tens of trillions of assets. So there's no reason you can't do that. And that's just the core brokerage. Then you go to retirement, which is even a multiple of that. Then you go into banking and crypto, or even multiples of that. Then you go international. Then you go to B2B. And so everywhere you look at it, it's pretty unique. When most companies go to their adjacent businesses, they tend to be smaller TAMs. For us, it's actually the opposite. As we go to some of these adjacent businesses, they're actually larger. So that allows us to grow. We actually build a 10-year roadmap. And so we have, we look at what we want to do, not just over the next 1 year, the next 5 year, over the next 10 years. And if we execute on that, we have a really cool opportunity in front of us.
And I'll just add that it wasn't long ago that Apple was the first company to hit $1 trillion, and we didn't think it was, that all these companies would be, and now there's $5 trillion companies, and soon we'll have $10 trillion companies. I have no doubt Robinhood will be a $1 trillion company.
Well, thank you.
All right. Let's see. Ahmet, do you want to take a question?
Vlad and Shiv, congrats on a great quarter. I don't know how I'm gonna follow up that question.
Congrats on a great hoodie.
It's a nice one here. Very, very nice. Yeah, I mean, look, I think what I'm observing in the quarter, especially as someone who's been kind of looking at the business and the trajectory over the past 5 years, is just really strong engagement. AUM at almost 400 billion. You're seeing the gold attachment rate at 17% of subscribers that are there, all-time high on gold subscribers. I guess my broader question is, why do you think the engagement is becoming so strong? Why do you think customers are so willing to adopt the credit card, agentic services, try out meme coins on the Robinhood chain? Like, what about the flywheel is working? And what do you think you can do to sustain that flywheel working for the next 10 years to hopefully get to that $1 trillion market cap?
Yeah, I think that's a great question. I think that first off, the products have to be good, right? I mean, we've rolled out a lot of good products. I think the credit card has been really great. Value props hard to argue with. 3% cash back on all categories, great UI, virtual cards experience is really, really good. And it hasn't always been not all of them. We haven't batted 1,000, right? We've had many versions of the debit card and cash management. If you remember McDuckling, we called it. It had various iterations before we found success there. But I think what we found is there is a flywheel, right? We get a customer in, they become a gold subscriber. They after they become a gold subscriber, they look out at all the different products we offer. If those products are competitive with what's on the market or better, they'll adopt them. And then a decent chunk of their earnings, if we get the direct deposit, go into Robinhood. And they spend time on the platform. They use us for a lot of our customers use us for everything. And so when we add something new, they're likely to see it and take advantage of it. So I think what we have to make sure that we do, and this is not an easy problem, is putting the right products in front of the right customers at the right times, making sure the entire experience is coherent. And that's actually becoming a hard problem because the app is constantly changing. And so the orchestration of all of these things into one story, into one financial tool is becoming an increasing source of focus, because I still think we could do better there. And making sure that all the individual pieces, even if you're not using 10 Robinhood products, each individual one should be world-class as well. I think if we can deliver that, all the individual pieces, and then stitching them together nicely, there's plenty more room.
All right. Thank you, Vlad. As much as we've had a lot of great questions in the room, there are even more people on the phone. And so we're going to start now and shift over to the Zoom Q&A. So the first person asking a question on Zoom is Steven Chubak from Wolf.
Steven.
Hey, good evening, Vlad and Shiv, and thanks for taking my question. Sorry I couldn't be there in person.
You're missing out, man.
I know. It's always a fun time, so sorry I couldn't be there. But wanted to ask on the updated expense guidance. At the start of the year, you guided to 18% expense growth, of which 10% or a bit more than half of the growth was really earmarked to support new product launches, 5% to support the core business, 3% for acquisitions. There have been a lot of moving pieces underpinning the new expense guidance. So just wanted to better understand how the buckets have evolved under the new guidance, and whether it still contemplates a similar level of investment to support some of the more nascent growth initiatives.
Yeah, great question. I think the really exciting part is we are able to self-fund a lot of the growth initiatives, so we are still growing. That is not changing. You know, Vlad just shared a lot of the different products and apps we're working on, and so we are still a growth company. But the nice thing is because we run lean and discipline, we can self-fund a lot of these. And so you mentioned the three different buckets. The short answer is the savings are coming from all of them. So a little bit's coming from the M&A. We're being a little bit more efficient. The new M&A actually wasn't even included in those, so we fully self-funded those. On the core business, the teams are really working hard to make sure they're delivering fast, but also doing it efficiently. So we had some savings there. And then in the new seeds, not only are we making sure that we invested what we started the year, but we've actually added some even relative to where we started. But we put it all together. We're halfway through the year. We're trending well. Our lean and disciplined nature is showing through. So we thought it was the right time to do it. But I think the takeaway is we are still growing, but we're just able to do it more efficiently. And so now is the right time to lower our outlook.
All right. Thank you, Shiv. The next question is from Craig Siegenthaler at Bank of America.
Vlad, Shiv, hope you guys are doing well. And Chris, nice job on emceeing this event.
He's a star.
Thank you, Craig.
Robinhood just received the MAS license in Singapore, so congrats on that. I think you also have 2 small brokerages that are live in Indonesia. So, the question is, where are you in the product rollout in Asia? What will the rollout look like relative to the US offering? And also, what countries can you passport into from Singapore?
Yeah, and again, just to clarify, this is for our centralized offerings. Now that we have the chain and all the DeFi offerings, we're live in a lot of countries with that. But for the centralized brokerage offerings, we did get the approval in Singapore. We are working hard to bring everything that we possibly can within obviously what's permissible by regulators over at MAS over there. And I think what we've learned from the UK is it's better to get more at once rather than just launching equities, following up with options, then launching margin. So I think what we're trying to do in subsequent launches is get more of the overall Robinhood ecosystem live at launch. So the team's been working hard on that. They're getting close. And I think that's generally the strategy you should expect us to take in other regions. And again, Singapore, we anticipate to be the Southeast Asia and the APAC hub. So we'd be able to passport there from there to lots of other countries in the region. And some of them, like Indonesia, will get direct licensure, depending on just where we see opportunity to go even deeper locally.
All right. Thank you, Vlad. The next question is from Alex Markgraf from KeyBank.
Hey guys, thanks for taking the question. Maybe one for both Vlad and Shiv on Robinhood Chain and the DeFi product expansion. I'm curious how you think, Vlad, about how the effort to engage with customers and the touch points change in DeFi products. Does it sort of force you to reevaluate how you interact with customers and capture the minds and wallets of customers? And then Shiv, just on a related note, would be curious if there's anything you can share from a monetization standpoint on how we should be thinking about those relationships versus the sort of CeFi relationships that exist today. Thanks.
I guess I'll start with how to engage with the customers. I mean, my observation is a lot of those customers hang out on Twitter and listen to podcasts, which are 2 areas that I'm somewhat active in already, much to the chagrin of the great comms and legal and compliance teams that we have. So I don't really see a problem. But we're always looking out for more. I'm not so active on TikTok. I don't really. Maybe I'm too old. Maybe I'm too boomerish for that. But if I have to, I'll do it.
No, it's been fun.
I'll do the little dances or what are they?
Yeah, sure. The engagement, as Vlad said, it's actually coming from developers themselves. So when you build a great product, people have to find it. That's one of the beauty of Robinhood. If we launch a great product, just given our scale and distribution, they tend to do well. And then this has just been another example, whether it's DeFi or permissionless or centralized. On the monetization piece, per transaction, we make a few basis points, not per volume, it's per transaction. Now it varies depending on the size of the transaction, but just think about it as a few basis points on average. And then we do share, approximately half of it with Arbitrum, who's the level 2 that we built on top of. And so when we starts to get larger and it goes through a couple quarters, we'll break it down more specifically. But think of it as a few basis points on transactions, and then a 50-50 a rev share.
All right. Thank you, Vlad and Shiv. And we'll see some of those dances later, Vlad. So the next question comes from Brian Bedell at Deutsche Bank.
Great. Thanks. Good evening, Vlad and Shiv. How are you?
Doing well.
Excellent. My question's on Rothera, and with specifically the company financial KPI contracts with SIBO, filing with the SEC to launch these potentially in the near term. What's the interest in Rothera launching these, in the near term? And then also just in terms of migrating more of the event contracts at Hood now to Rothera, such as NFL, how are you thinking about that game plan for the rest of the year?
Yeah. So on the CBOE financial KPI contract, so my understanding is those are under the securities-based regime. So I don't know if Rothera would be launching those right now, but obviously, Robinhood is able to connect to a wide variety of counterparties. We have a brokerage business. We also have our FCM business, and of course, Rothera is, a great joint venture that we have with SIG. So that doesn't necessarily mean that we're not going to make all these products available to customers. I think the products in general are useful. There's interest, and so we always evaluate opportunities for adding new things to the platform.
And then in terms of the flow, what we've shared is, you should expect in the near to medium term, more than the majority or a good portion will flow through Ethereum. We're still making sure it can scale, and after 1 month, it's already doing tremendous volume. But yeah, you should expect that more and more of it will start to go through there.
All right, thank you. The next question is from Patrick Moley at Piper Sandler.
Yes. Hi, guys. Thanks for taking the question. Vlad, I just wanted to follow up on your earlier answer to James's question on perps. I'm just a little confused why you all are not being more aggressive with launching perps in the US. I think a little over a year ago, you submitted a comment letter supporting, CFTC allowing perps in the US. They've opened the door now on a number of products. You have a few of your competitors who are either live or they're moving in that direction. And, what they're really trying to do is become more of a multi-asset class platform so that they can compete, more closely with you. So could you just elaborate on what the source of hesitation is with perps in the US? Are you worried about leverage? Is this, are you worried about cannibalization of other products, or is this a deliberate choice to let others take a regulatory first mover risk? Thanks.
Well, no, I don't think it's any of those things. I think we're in some ways in the fortunate position of having lots of great products that we see huge opportunity in, right? And so the roadmap, just a couple of weeks ago, we launched 13 new products that we're in the process of rolling out. And as Shiv mentioned, we had 2 new businesses just in the past quarter get to 100 million ARR or more, and we see a lot more coming. And we have perps live in overseas as well, both through our DeFi offerings and through centralized. So I wouldn't take that to mean that we don't like perps. In fact, we like them quite a bit, and we intend to offer them to our customers. I didn't give you a timeline, but I wouldn't take the absence of a timeline at earnings to mean that we don't intend to be aggressive. I just don't like giving timelines and earnings. That's what our events are for.
All right. The next question is from Ben Budish at Barclays.
Hey, good evening, and thanks for taking my question. Shiv, I was wondering if you could unpack the July commentary a little bit more. You said ADV was trending similar to Q2. I guess on a product by product basis, equities, options, should we assume that that's equities similar to Q2, options similar to Q2? And then any color you could share on the take rate. I know particularly for options that one bounces around a little bit. Crypto you didn't include in that commentary. Curious, not to make this a multi-parter, but what drove the fee rate improvement in Q2, and then similarly what you're seeing in Q3. So sorry for squeezing a bunch in there, but yeah, any color there would be helpful.
Yeah, happy to, and I'll try to make sure I hit all of them. First, the way you read it was correct. So for July, the ADVs for equities, options, and prediction markets are all in the similar area of Q2. So those are seeing pretty healthy engagement, all of those. In terms of crypto, it's probably a little bit slower than what we saw in Q2, and so it's early in the month, but that's what we're seeing to start. And then for take rates, for July, they're in a similar area to what we saw for the Q2 average. So I would use that as kind of your starting point. For what drove the improvement, take rates are an output metric. There's a lot of different things that go into them. And so, for equities and options, it's mix shift, it's volatility, it's the type of contract. For crypto, it's institutional and it's what tier. So lots of moving pieces, but big picture, July is off to a similar zip code for take rates, and then for most of the asset classes to the Q2 average.
All right. Thank you, Shiv. The next question is from Ed Engel at Compass Point.
Hey guys, thanks for taking my question. We know that you're pretty focused on bringing more of the volumes onto Rothera within prediction markets, but we did see some news reports that you're exploring some partnerships with some other exchanges as well. Just kind of high level here. I mean, do you see any opportunity to kind of improve your economics by partnering with different exchanges, or is the focus more to bring more activity just onto Rothera?
It's both. And I think, we're invested in Rothera, and we think that the economics there are great, and we intend to push more flow there. At the same time, we've always been connecting to additional counterparties. We first connected to ForecastX, which is IBKR's DCM. Then we went to Kalshi, then of course Rothera. And so we always are on the lookout for diversifying, making sure our customers have access to multiple options, and we're not reliant on any one individual counterparty.
All right, thank you. The next question is from Andrew Hardy at BTIG.
Hey, Vlad, Shiv, thanks for taking my question. Sorry, I can't be there in person. My wife's due next week, so probably best to be around
Congratulations.
here, but looking forward to setting up a Trump account very soon.
Gotta do it.
Just wanted to follow up on the top of funnel question. Vlad, you said earlier there's more to come. Would love to just kind of hear areas you're focusing on for customer acquisition strategy and focus areas, just generally speaking, going forward there. And then just another part of that, with the pattern day trading elimination or rule elimination, did you see any benefit in the quarter? And is there anything you're doing to try to draw back customers that you might have lost in the past? That'd be great. Thanks.
Yeah, maybe I'll hit top of funnel. You can talk PDT. I think there's a lot of improvements to the product, making sure our onboarding is really clean, particularly as we get more and more products, and you can sign up for multiple accounts, multiple assets. I think we've been spending a lot of time investing in that, getting customers to share the product with other customers. There's always opportunity there. And of course, we're also looking into, as banking is scaling and we're seeing traction there, as the card is getting north of 1 million card holders, can we make it even easier for folks signing up for brokerage to get the card and turn that into an active driver of growth in the other direction, meaning customers that are getting the card and coming for banking, can we get them into brokerage. And yeah, a lot of those are opportunities that we haven't really explored up until now. So there's just a lot of things that we have conviction in that remain in front of us.
And in terms of the PDT, as a reminder, we're very pleased that the SEC removed the antiquated rule where small balance customers were penalized for the way they're trading. And so really excited for customers there. It was a nice tailwind in June when the rule went through. I think what we're seeing is it's broader across the whole industry. So for regardless of what brokerage, we probably had an outsized benefit relative to our peers, given our customers have smaller balances. And what we're seeing from customers is they're still continuing to come back and adopt it. And so I think it's going to be something that we continue to see a tailwind for, not just this quarter, but in coming quarters. It's too early to tell what's exactly going to be, but big picture, customers are using it, they're coming back. And we're already seeing it at NPS surveys and other methods like that, where customers who had left are really pleased they're allowed to trade again.
All right, thank you. The next question, I think, is from Mike Cypress at Morgan Stanley.
Mike?
They were just loading and connecting. Oh, sorry. Sorry, I was my mistake. Chris Allen at KBW. Or perhaps not Chris either. All right, we'll try one. We'll try one more and see if we can get into the Hall of Fame. Going 1 for 3. Next, we have Gav from Wolf Financial.
Hey, Vlad and Shiv. Great to see you guys.
Hello. What's up, dude?
What's going on? My favorites. Doing well, doing well. Super excited to be on here. I wanted to talk for just a second about AI agents and agentic trading. This to me is one of the most fascinating things that you've rolled out in a long time. I've already hooked it up. I've got Claude in there trading, and I could really see this driving additional volumes as it goes on, right? People set up strategies. Now it's trading with them, not even having to be there. And I'm really curious, milestones that you're looking forward towards in terms of agentic trading, and if you think that this could truly swell volumes really beyond the human side of trading. And then in a second part of that, I am curious if you are going to give the AI agentic trading access to prediction markets.
Yeah, I mean, on the product side, the goal is to give it access to all of the tools that you would have as a human trader using Robinhood. So it's interesting for us because Robinhood's been kind of traditionally pretty closed off. We've been constraining access through our interfaces. Now we're opening it up. So traders and developers will get access to all of the capabilities where it makes sense. And yeah, I'll just say that the team has really been cooking on the agentic stuff. I mean, we've got lots and lots of things. We were early to market, but I think there's so much more that can be done. So we look forward to sharing more, including at the active trader event that we've got coming up.
Looking forward to it.
All right. I think we can finish strong here. So Vlad, would you like to offer any closing remarks?
Well, first off, thank you for all the engagement, both from institutional, sell side, retail, and our content creators. I'm really proud of the community here that's coalesced around the company. And you should know, as always, the team's been working incredibly hard. The roadmap is really full, and there's a lot to do. So hopefully see some of you at the next Hood Summit in Houston, Texas. Thank you.
Okay. I was a little bit taken back by I got a message that pulled me out of the thing. So I'm curious your thoughts on the call.
Yeah, on Robinhood itself, like we looked at before the call, very strong. A lot of things going well for them. A lot of questions asked, and I had 3 questions lined up. They're all asked, so that's why I didn't ask a question because that's
Yeah.
in the queue. But yeah, nothing is really concerning me there. It's tremendous speed, especially on EPS. And it's clear that they have a long-term vision, no matter what's happening in the markets. Like they're just positioned so well. The thing that distracted me in the call is Microsoft.
Microsoft.
And can we? Do you have any thoughts on Hood? And then let's just touch on, because we have to talk Microsoft here just for a second. I got to go.
No, dude, I don't have too many comments. I didn't even join the call because I didn't have any questions. Like
That's
I thought
because you hate Vlad. Come on.
okay, let's
No.
I love
Yeah.
Vlad, man.
Yeah, he's awesome. So Hood, Amy Hood, Microsoft CFO, she saved the markets. She saved the markets. Microsoft came out, and we already saw the strong report, not increasing top line of capex. That's significant, but Meta, same thing, although they did increase the lower end. But beyond that, they had said, or she said, that they are not, that they will be free cash flow positive all the way through 2027. So they're somehow balancing pretty incredible growth with an incredible opportunity. They're building capex, of course, with insane free cash flow this quarter, and they're free cash flow positive all the way through the end of the year. So, man.
Yeah, it's incredible, man. Microsoft looks like a juggernaut coming out of this quarter. Azure growth accelerated to 43%, and they can do this while remaining profitable. Dividends, buybacks, all going strong. Like somehow they're going to stay free cash flow positive.
And like, I really think this is bigger than Microsoft too. Like we can see that without low volume, so we can't like overly commit or anything. But right then, Nvidia started inflecting. Right then, all these little silicon photonics and supply chain and the AI started inflecting. Micron's probably up. I haven't looked at Micron. CoreWeave was actually green after hours, like CoreWeave, which only knows red. It has not seen green at all. No signs of life. Hardly any. Now, this could easily fade, but like it's a pretty strong move for a lot of these names off of where they had bottomed out. So,
yeah.
Do you think, am I reading too much into here, or am I like legitimately thinking like, this calms a lot of fears that people had related to the accelerated CapEx build out?
I think that it, at least to me, what it does is it makes you realize that you can't bucket all of these names into one basket, right? And that there will be execution differences. Some will put all their chips on growth, and you're going to end up seeing that. There's a big difference between 43% and 82%. That is a big difference in growth on cloud. Azure is doing it from a much larger base, but obviously Google is spending a lot and they're willing to go into, free cash flow negatives. But I think Microsoft's being very advantageous here because there really hasn't been a big tech cloud name that's willing to stay profitable and grow and get customers. Making sure that their customers are happy, making sure that their investors are happy, and drawing that fine line. And I think that that's a great way to play this. I don't know if I want to go in and buy the dips on some of these names or just go in and buy Microsoft, because even after this like run up, it's $418, for a full year of high free cash flow. So, maybe buying the winners here is just the way to play it. Now, you said that you have to go. I have to go. If I could also make an announcement here, I am likely not going to be live till earnings tomorrow. I'm going to have to cancel my live stream to do a special recording. This one's going to be a big one, ladies and gentlemen.
Yeah, I'll tell people what it is. Tanner's actually getting into opera and opera music, so you're going to get to hear him at a very high level. No, just kidding.
Well, I got a text during the thing, and they said, "Are you available tomorrow?" I was like,
"Nice."
Yep. Okay. Ladies and gentlemen, that's it from us. If you guys have enjoyed the channels, make sure you subscribe to myself, Roy, Amit, for being at the actual event. Until tomorrow, see you guys next time. Bye for now.
Later.